Good morning. How's it going? So, I'm thinking a lot about. Good morning. Good morning. Good morning. Good morning. Thinking a lot about this. It's going well. I had my kiddo's first day of school. He's in fourth grade, and good morning, Chris. I was up pretty early to see him up and off, and yeah. So I was kind of busy this morning. Kind of tired too, cause I don't usually get up like super early. It's not really a good habit, but I just tend to be a night owl. It's not really helpful for the stock market either. I have a lot of trouble getting to sleep before like midnight, even. I don't know why. Always like wide awake. I think part of it is because sometimes I do taekwondo at night and it's like at 8 o'clock. So I get like wired. So my body is like used to being awake at that time. Like it's like more active. My internal clock has become like used to that, to being like active late at night. So then like I end up being pretty awake for like another 4 hours. And I don't really like that sometimes because I know like there's the old saying like early to bed, early to rise makes a man healthy, wealthy, wise, or whatever. And there's also the early bird gets the worm kind of thing. And I think in the stock market that's especially true because you have to be up and kind of looking at pre-market values. So, Nicholas, what are you doing? Are you seriously getting married today? I mean, I don't know why you would joke about that, but wow. Well, I don't have a lot I can do for you, but what can I do for you? Let me think. I can't do anything. Put you in timeout. I don't know, man. I can't really do anything for you. But no, I can't do anything. I'm trying to figure out what I can do. Yeah, no, seriously, big deal. If you really are getting married today, that's crazy. It's funny. Like the day that I got married, I woke up in the morning and I played. This is a while ago, I guess, but I played World of Warcraft 3 or Warcraft 3, not World of Warcraft. Warcraft 3 with my college mates. I got married pretty young, and I was happily married young. But I'm saying that like the that morning, I remember we woke up and I was like, they're like, what do you want to do? You don't get married till like 1 o'clock in the afternoon. I was like, just want to hang out. I was like, I'd rather just do something fun. So we played Warcraft 3. We had like a LAN party. I don't know if you guys remember what those things are. You're like, how old are you, Booksy? Old enough to have LAN parties. I used to have LAN parties. I guess people still do that with computers, but what do we say? Happy marriage day? I don't know. I mean, this is kind of weird. I mean, you don't want your crap put all over the place, but I'll put it up for a little bit. He was happily married. He ain't no more. No, very happily married. I love my wife more than I did when I married her. To be honest, and that's just a good thing maybe, but that's funny. No, I didn't mean it like that. I'll leave it here. Actually, you know what? I'll tell you what. Since that's a little bit weird, it's more likely that people would see it in the chat anyways. So I'll pin it in the chat. I don't know what else you call it. Wedding day? I don't know. What do you call marriage day? I don't know. Wedding day? I'll pin it up in the chat. So there we go. So now everybody has to see it when they come in. Say congrats to you. Hey, best of luck with that. It's mostly chill. If you've never been married, I'm sure a lot of people have been married more than once. Usually, if you're gonna do a wedding, it's usually your first marriage, and maybe your only marriage, you know. And so the idea of going up there and committing yourself to someone is kind of daunting. But if you're already at that point, I'm sure you've thought about it a lot, ready for it. I really enjoyed my wedding day. It's definitely probably one of the top 5 days of my life. I had a lot of fun. There's always things there that can like stress you out, but you just gotta like ignore them, I guess. Just focus on the person you're marrying. One-time subscription. Yeah. Well, you know, I mean, it's just the age we live in, and I don't want anyone to feel bad if they had more than one marriage. It happens. There's a lot of reasons for that too. It's not always like some failure or something. Like, I don't think that's the right way to look at it. Yeah, there's so many different reasons, you know. But the day in itself is pretty special, so I hope it is special for you. I really do. I hope it becomes one of your top days of your life. I say top 5 because the day my son was born is definitely up there as well. And there's probably a few others, but I mean, those are probably the top 2. Just family. Things that mean the most to me in the scheme of my short life on this earth. I mean, there's probably a couple others I could think of, but... So, what are we looking at right now? We're looking at, yeah, exactly, make memories and have fun. Don't do anything stupid. Don't do anything regrettable. One of the things that we decided was that we didn't want to slam cake into our faces. I don't know where that tradition comes from, but like my wife was like, "Nah, I don't really want to do that." And I was like, "Nah, I don't really want to do it either." But it would have been easy, like in that moment, to be like, "Ha, got you." So we still fed each other cake just to be cute or whatever at that time. But then it would have been easy to like kind of back off that. People do stuff like that, and you don't realize like you don't want to ever put your don't put your significant other in a place of like embarrassment, especially on their wedding day. So just be smart. I'm not saying you're not smart. You might be the smartest guy in the room. I don't even know what I'm trying to do. I'm not going to give you advice. Just have fun. This setup. Okay, so this is United Healthcare. So what is the title about today? Why am I even talking about? What do you mean 15 perfect trades? So I thought about it. For some reason, I had this bizarre like thought last night, right? And I was thinking about how we're kind of waiting around a lot for big moves to happen, but they're happening pretty much all the time in the market, right? Like they're almost always happening. So there's no set rule for how a move might set up. There's a number of different setups that could produce like a pretty sizable move in the market for sure. And there's a lot of different, we would call them bullish setups in the market that you could trade. And I was thinking about how for United Healthcare, this is a really crappy situation that they've been in. And a lot of people, if not all people, if you read like articles and stuff, are super bearish on it. And I remember a very similar situation to this not that long ago. And it was really similar. And I was checking out, I guess I should look on this one. I think it's on this one. I was checking out that situation. I was like, you know what? It's basically the same thing. So I had talked about this with Apple as well, because I said, you know, when Apple has started getting like really bad news, it's like no one can give them a break, right? And so everybody's talking down on it, saying, well, it's in a bad situation. It's not doing well. It's behind. It's all this other stuff. And it is. It's lagging behind the market. But those situations are often plagued by like negativity. And yet, there was a situation like this not very long ago. There was a trade that we took. We actually took this trade not that long ago, and it was off the Tesla bottom. And on the Tesla bottom, there was this really big macro bullish divergence. And when it finally broke the bullish divergence, which did take a minute, it wasn't instantaneous. It wasn't like an instantaneous move, right? If you had just traded it like a basic, I mean, really basic stuff, like you see a divergence, you see the RSI breakout, you see the wedge or the creek cross, right? If you had just traded that, even with just shares, this would have been a pretty massive move, like 43% move. Now, this is a large cap stock, and we know that small caps tend to have more volatile moves if they have a real low float, and they sometimes run 100, 200% plus. And I was thinking about how if you're able to trade options, well, not everyone is able to trade options. I was like, I wonder how many trades it would take to get from $50 to $1 million. And it only takes 15 trades, but 15 like perfect trades of the same size. The problem with that is that in order to make that happen, and the reason why not everybody's done it, or can do it for that matter, or would be successful in doing it, is multifaceted. But the basic thing is, one, is you'd have to take no losses, essentially. Like, so that's what I'm saying. It has to be a perfect trade. Two, you have to go all in every time, which is super dangerous. So you have to take no losses. You have to go all in every time. And then you have to execute it, I guess, perfectly, right? So you have to hit the percentage. What's the percentage that I'm aiming for? Well, it's 100%, which is kind of silly. Because again, if you're trading shares only, then 100% every time is almost impossible. You'd have to find a system where you could do a stock screener that allows you to catch 100% moves like consistently. Now, there's people that do that, but even in the midst of that, it's very, very, very challenging. It'd be very taxing. But in theory, if you were patient enough, it might take you 15 years in theory. I mean, it wouldn't be likely it would take that long. But if you only did one trade a year and you started with $50, this is just simple math, and you just doubled it every time you did a trade. So you had 50, 100, 200, 400, 800, 1,600, 3,200, so on and so forth, right? By trade 15, if you were able to double that value every time, you would have well over $1 million. So I was thinking about, like, why is it that no one does that? Like, why do we not do that? And I think there's probably only like two main reasons, right? And I think they're pretty, well, maybe three reasons predominantly that we don't do this. Like, one is that we're not patient enough to find like the right trades. So this is the same situation. And I was looking at this like, yeah, this is definitely like one of those 100% trades easily. If you can trade options easily, you just have to be in it at the right time. And it's not even like that complex. It's a very simple setup. It's an massive RSI divergence. And the last time it did this was back here. That was pretty recently. It was recent memory. This wasn't even that big of an RSI divergence. It was there. It wasn't like, it was bullish. This thing ran 35%. which in an options trade could have been pretty huge. I mean, if you're buying at, that's a over $100 difference. If you were buying at 437, which is unlikely that you would have gotten at that price, you definitely could have traded that whole thing. So again, what's the problem with this theory? Well, when you're looking at like math doesn't really work that way, right? It's like you could easily say, well, Booksy, yeah, that's true, but you'd have to have guessed that this was the bottom and been correct about it. And then you'd have to have entered right there and been correct about it. And in addition to that, if you're not trying to take any losses, then you have to play the risk ratio, because there's almost no way, it's almost impossible, right? Without tax implications, right? I'm not talking about taxes, because obviously if you make $1 million, you're going to lose like a huge amount of that. Like that's going to, but I'm just saying in the concept of, you'd have to do one more trade probably. So 16 trades. But I think 15 gets you to like 1,600,000 or something ridiculous. I don't know. I did the math. It's really just 15 times 2 to the power of 50 times 2 to the power of 15, right? So it's not even, and it gives you 1,600,000. So you probably, again, would still pass 1 million with 15. Maybe the 600,000 has to go to Uncle Sam, which is a lot. I don't know. I don't know what the tax rate is on that kind of capital gains. I mean, it's a lot. They go up quite a bit when you earn a certain amount. But there's a lot of issues like in terms of like entry and like cost ratio, right? But like this is the equation. Times 2 to the power of 15 equals 16. What was the number? On my calculator, 1638400. So in order for that to like work like efficiently, gosh, what the heck? I'm gonna add the commas, but that's not how you do maths. But in order for that to work efficiently, like there's so many problems, right? Like, so one of the big ones, of course, is like the entry and the idea of risk. So like your stop loss basically, because you have the problem of like, even if I entered here and I thought this was the absolute bottom, it's entirely possible, if not likely, that during this time period, while this is chopping up, you actually might be losing value to some degree. It's entirely possible. Because sometimes you don't know, especially with option contracts, you really don't know like what that's going to look like underlying. There could be a lot of changes. And then timing, right? You also have the timing problems. You have decay, essentially theta decay. So there's a lot of issues with that. So really the only place you could be more or less assured with an entry would be here. And that's not nearly the same move. So it's easy to look in retrospect and be like, and then even in addition to that, look at that dump at the end, right? Before the pop. Who knows what that did? That could have really screwed with your trade. So shares is definitely the best way to go in a lot of ways. Even though it's easier to make 100% on options, it definitely is easier if you are in and out at the right time. Like, it's just more likely that you're going to do that as opposed to trying to find a 100% trade. A 30% trade is still a pretty awesome trade. That's a big trade for a swing trader, in my opinion. I think that's really good. But that would have to be shares only, and you'd have to buy down here at the bottom with a stop loss down here that says, yeah, I'm not going to get out till whatever. And then you'd have to have exits, right? And those are obviously the bigger problems with anybody in the market. You're like, well, duh, that's all trading is. But like the theory behind this is what I'm saying is that that's one of the biggest problems. And then the other one in looking at this is, again, like you have to be all in every time. So you're basically like risking it all every single time, and you wouldn't be able to go halvesies or something. You wouldn't make it there, at least not in that way. It may be possible to do it with some alternative setup, but you wouldn't be able to successfully do it within 15 if like you missed a couple trades, then it would just go up. So this is a bit unrealistic, and I think a lot of people would be like, yeah, that's not going to happen, because you wouldn't end up making perfect trades every time. Patience is like the other thing, because if for example, you only traded when you were like, let's say you were like most traders, what they do is they trade with like a 50% win ratio, right? But their risk to reward ratio is really decent. So 50% isn't good. That's basically just guessing. So if you're better than guessing, if you're able to look at something and say, this is a better than just a guess for a number of reasons, and say, yeah, I don't think this is the way it's going to, I think this is the way it's going to go. I think it's higher than 50%. Then you're already better than kind of bare minimum, right? But bare minimum is like, you have to win at least 50% of the time. If you have a good risk reward ratio, then it will work. Because if you think about it, you could take 100 trades at 50% and that's not a very good risk. And you would assume that you would only win 50% of the time. So 50 out of those 100 trades. But if those 50 trades are greater reward than the 50 trades that had losses, so let's say you only lose at most, I don't know, 5%, but you always gain 20%. Well, you're going to make money in the end. Like that's essentially how it works in the world of day trading. And when I did day trading, if you will, I would trade like maybe 2 times a day. I did this over a decade ago. And my goal was always to get at least a 6% trade, which isn't great, but I mean, I was just trading like basic stuff, like ups and downs on like channels and stuff, was to try to find something that could give me a 6% trade and then always have a cut my loss, at pretty low amounts, if not scratch. So it was okay. It was very like stop and go. I think I had moments where it was like, yeah, this is working. And then other moments where it's like, this is going to take forever. And it's true. It would take forever or a long time, which is why a lot of people don't do it. But the other thing is like, because it takes a long time to build wealth. The other thing is like, even if you could find these perfect trades, it's like you could think that this could take years, right? And the idea of waiting around for months on end and not trading really scares a lot of people. It's kind of like, well, I need to get money, I need to make income, and especially if you do need it, it's liquid. It'd be like really difficult, right, to wait 3 or 4 months between each trade because you're not, especially in the beginning, you're not making anything. You start with $50, then you're going to end up kind of banging your head on a wall when you've only got 400. You've only hit like 400. You probably feel good about making those trades, but it's a long time, right? If it takes years to do it. So that's another big reason I think why people wouldn't do this. But what's fascinating to me is I was thinking about like opportunity in the market. And I was like, all right, it's a pretty low percentage. I don't know the number, but I would guess that it's less than 1% by far because there's thousands of tickers, right? It's probably less than 1%, way less than 1%. It's probably like 0.1% actually make this kind of a move every day. But if you have the ability to screen the stocks for like a specific kind of move, then I think that you could at least have like a higher probability of finding those trades before they happen. So I was thinking about this and I was like, what's the real reason that people don't do it? It's hard, it's not easy, but it's sort of a confluence of like problematic entry and exit points having to do with like the risk reward ratio, not being patient enough, and then the inability to kind of find the tickers that are moving the way you want them to move. And so I was like, the more likely candidates, if you're doing like low float's going to give you like a higher push, but you have to have like also have high volume in those moments. And typically if you're doing just shares, right? So it's like low float, high volume moves that could build out to up to 100%, right? And these are 100% trades. Like this is essentially what we're talking about. But I know, and you guys know this, almost every day, if you go to like, your watch list or whatever, you can set it up to where you see like top earners every day in the market. And almost every day, some stock is running like this one right here is running 38% LPSN right now. It's way up, right? I mean, that's huge. But like, that's just on my list. And every single day, there's probably at least one ticker out there that's running 100 to 80 to 100%. Once you get to that point, it's kind of like, well, I don't know how I would possibly trade that, even if I knew that was going to happen ahead of time. You still have to find that setup in just the right moment. But I think that this idea, when you distill it down, is actually pretty simple and attractive, because even if I doubled that and made only 30 trades, like let's say I made 30 trades, that's actually far less than most day traders will make. Now, some day traders, which is not normal, this is not the normal. Most day traders over time actually probably lose money and then stop day trading. I'm sure the statistic is bad. The ones that are successful, even then very few are making, $20,000 per trade until maybe later in life when they have built up some funds. And so the idea of this being like a little bit ludicrous is not lost on me. It's a bit silly. But I look at something like this and I'm like, this setup is so similar to what happened with Tesla that it just really makes me wonder, what the heck are we doing, Because if you look at something like this and you were able to be patient, these are months apart, right? We were talking about May to August. But if you were able to be patient between those months, right? And let's say you were pretty patient, and even if you just got shares only, you bought one share right here, right? And you made 60% on this, you'd have enough, $200 to 366. You'd have enough to buy a share here, right? And you're talking about pretty much the same trade, like 240 up to 330. Now that's not enough. You guys are like, that's like $200, dude. That's like nothing. I know. But what I'm saying is that like the options contracts are something you can consider as well. So I find it to be a very interesting idea. I don't think it's hopium. I think that there's only a few people probably in the world who actually have the patience for this. In fact, outside of what I see day to day is typically like, it's a mixed bag, because I think that some people that watch the stream, like yourself, Nicholas, are doing things during the day, and they're not going to sit here and watch this all day. They're not going to sit there and watch stocks all day. It's very unlikely they're going to do that. But I can tell you right now, we're running at like 12 viewers, right? And about 20, 30 minutes ago, we had double that. So already it's like, we don't know what's going on in people's lives. I don't know what's going on in people's lives. It could be that, again, you had to step out. Somebody had to step out and do something. It could be that, I'm not talking about AMC right now, so let's come back later when he's talking about AMC. And he's not talking about trading, because I don't really want to trade, right? Even though you're trading AMC. Just give me what I want, right? The peak viewership here was 24 people. And now we're already down, to like 16 to 12 or something like that. And that just shows you like the high bar of entry for this specific one right here. I think this is probably the most difficult thing, is the lack of patience, right? Or having patience, either one, and developing patience. Discipline and self-discipline all kind of include all of this. I mean, you have to have all of this, right, to trade effectively. All this stuff right here. But I think that that's just kind of basics 101, right? You need to understand entry and exit and risk management. And then you need to have patience, and you need to screen your stocks. This is all super straightforward. None of this is like new information if you've been around the stock market. But the patience one, I think, is like the big one that I think it's like, that's where you lose like most people. Because most people, we can't, and this is probably the reason why most people don't do this, because you do not have the time, and it's not really fair, right? You would say, well, that's not really reasonable, Booksy. I can't live off of $50. I can't live off $100. I can't live off $200, $400. Shoot, I can't even live off of anything until you get up to like $30,000 a year. So how am I supposed to survive if I'm just waiting around until I eventually have the 30,000, and how many trades does that take? And even then, do I have to take money out of that? 'Cause then I'm in trouble, right? But I was thinking about how like, that's true, but this is only just like one thing, right? This is like one little tiny formula, and if you were able to work outside of the market doing something different, and only make these trades when it's appropriate, it's entirely possible, I think, that you could do something like this on the side, albeit it would take a lot of time. Like you'd have to devote a lot of extra time to this part, the screening and the setup. And that would be a huge, basically a second part-time job in some ways to make sure that you insure it. But it made me wonder, because like 15 trades is like basically one a month, for a year, plus some for the next year. I mean, so within about a year and a half, I think if you were maybe miss a month here or there, there's just nothing good, or you just don't find it in time. If you're able to do that, I think within about a year, you could go from 50 to a million plus, which seems ridiculous, but it's just math, right? And it's just about patience, and it's about finding the setup that you believe in that does pay off. And again, I don't think this is like magical thinking in some ways, right? Because it's sort of assuming that you could do this perfectly and not screw up, or not have like one trade that just, well, I stopped out and that was it. Now I lost my trade and I can't do it again. But I was just thinking about it last night, my head on my pillow, and I couldn't sleep. And I was like, what? How many, what is the actual number, And if you messed up, I wonder if you had buffered into that, like lurking variables. And I messed up like 5 trades, what would that look like? How much would that set me back? Anyway, I just started thinking about that. And I was like, it'd probably be easy to do a few of these. It'd be really hard to do 15 of them. And I bet that's why people don't do it. Otherwise, everybody would be millionaires within a year. It just doesn't seem possible, And again, I think, like I said, magical thinking is just this thinking error that like, well, I'm going to be able to do this effectively every time, probably isn't the best way to go about living. But you also have to have confidence to trade. Scared money doesn't make money, right? That's just sort of the old adage. And I think it's true. You have to just be willing to say, well, if I'm going to do it, I have to try, and I have to like work on that setup. So I've been thinking a lot about that. I think what I want to do, I haven't actually found great stock screeners that I like. I mean, there's a screener here in TradingView, but I'm not a big fan of it. I'm going to see if I can adjust some things on it and see if I can make it work. But I think there's a possibility that something like this, as ridiculous as it sounds, could come to fruition with enough patience. But it would require a lot of downtime. It really would. And non-trading time. Like 99% of your time would be, I'm not trading, just kind of waiting. And that's really boring. And it doesn't make for a good stream, for sure, when you're just kind of sitting around twiddling your thumbs and you're like, well, you're not doing anything. You're just looking at stuff. Yeah, I know, right? Yeah. And going all in when your balance is high would be very challenging. And that's what I think, when I think about why this is so difficult, I really think about that it's like rolling the dice, right? It really becomes a little bit of gambling at some point, because you will have this risk ratio that, especially with options, it is totally possible, guys. When Tesla popped here, my calls went up like 200%, easy. I think it was more than that by the end, but I exited as it went up, right? The thing is that before then, it was kind of crappy. Like this time period when it backed up, it didn't look very good at all. I mean, it basically had like destroyed them, and then they just ripped, And so the problem there would be like, you have a stop loss, you have this great setup, but the problem is like, that's what this is about, in some ways. It's a multifaceted move, but this is basically a shakeout right here, this dump, So you could easily get shaken. And then the question is, yeah, but if it had kept going, let's say it was down 20 to 30% and you cut your losses and it had kept going, you would have been really happy that you cut your losses. You're only really upset because you didn't know the future if you cut your loss here, right? And you were down 20%. You didn't know the future and you missed out. And that's why, again, patience is key, because even though it's probably going to give you a better monetary value in the end, if you somehow got in right at the bottom, you're really not getting confirmation at all till here. And even then, it takes time. So a shares only approach is probably the best approach. And I was thinking about that, and I was thinking about the like which tickers that I have that have done really well with shares only. Fang is one that is doing very well with shares only, and they pay a dividend, but it's expensive. And it also doesn't run like 100% most of the time. Like I bought some way down here around like 120s, but even that's like 30%. I mean, it's a good gain, but it's not 100%. It takes a lot longer, right, to get to 100%. Is it possible that this goes back up and gets to 100%? Yes, because long term, this has that potential. This is a big widening. Like long term, if this breaks out, it's probably going to head back towards 200, 215. So like, yeah, this is one that could do that, but it's going to take a long time. So another thing, now you guys are like, that's not 100, that's only 60, 65. Exactly. It's still not 100%, but I think it could break out and go higher eventually. Potentially. It's not like a guarantee. Okay. And those are things that I'm wondering too, is like a layered approach to this may also be effective. So like each of these trades makes it seem like you're going in, and this is true, because like this is one trade. This is like one linear path, right? So you're doing like a trade and then you're waiting and you've got a lot of downtime, and then you're doing another trade, right? And then you're waiting and you're doing a lot of downtime. And it's only one like basket of money. And that's another thing that's like, this is totally irrational in some ways, because it's like, well, you're just sitting on that. It's not actually gaining anything. Could you invest it while you're waiting? But then you don't have the liquid. And then in addition to that, it's like, well, I have more than $50 to spare, Booksy. Maybe I have 1,000. Could I kickstart it with 1,000? You'd be able to do it in less, but there's this other idea that maybe what you'd be better off is essentially like duplicating this process. And that could also potentially like rapidly get you there faster, because if you're able to do this like 2 or 3 times over on different, setups, and I don't know exactly what that looks like, but I'm just thinking about it. That's all. It's just mathematical, so you go through like, maybe you do this on 2 completely different tickers, right? And this is where you have like 50, and let's say you didn't get every time, you didn't get like the full amount, but you start with 50 on each kind of branch here, and you do this like in variable ways. So maybe this one only gets to 75 like by the next round. You don't have as much, you didn't get the 100%. This one, maybe you didn't lose, I could do 3, because probably one of them you'd probably want to see it lose money or something. I'll do another one. I'm not going to do the boxes again. That's a bit much. We don't need those boxes. I can't even grab it. I can't grab the box. It doesn't want me to do the box. Maybe another bracket you have, and you guys are like, well, why not just mix and match them? Why can't you just use all the money in once? You could, but the thing is like, then you're all in, right? So this idea of like, I don't want to be all in. Maybe this one gets to 89, or maybe it is a little higher. It's like 105, like you did really well. And then this one's like a loser, and you actually went down to like 35, right? And you're kind of averaging these values. So your average ends up being roughly on average made 100, if you're averaging them. And that, to me, that makes sense. I think where you get kind of like, well, why couldn't you just do this and then add them all together and then do the next trade? Well, I think you could. It's just a personal, like, I'm just saying, like, statement wise, like, this is difficult now, because here I don't have like enough money now. Now I'm starting with less. So this one actually went down. So this like decreased in value, right? this slightly increased, this like greatly increased in value. So like I have a problem where like now I'm starting with less. It's even harder because if I double this, now it's only 70, right? It's not that effective. But you could do like an averaging where again, you kind of pool it together and divide by 3, something like that. So I just think math in itself is really interesting like that because it's just numbers. They're completely neutral. They don't mean anything unless they are supposed to mean something. And in our case, they just represent, dollar value. But it totally could be something like that where you have that amount and you're like, all right, well, on average, then I only made like 20% or something. And that's like not quite right, but $71 a piece. That's pretty low. That's not hitting your mark. But it's now you're starting with $71 for the next trade instead of 50. I don't know. It's just a weird kind of tiered approach to this idea of like I could take money and use it in a way that is intelligent, I suppose. Yeah, it happens, but it's hard. It's hard to hold when it's down like 50% on options because you're basically at that place where you're about to lose it. The 50% cliff is real. Once you hit 50%, if that stock keeps sliding, it drops off the cliff usually really fast. So, you take something like this and you could say, well, I like the idea of it, but how would I even execute that? Well, that's what I'm saying is like, this is an approach that requires some serious patience, that I think most of us just don't have. Like, we just don't have that patience. I mean, just being honest about myself, it's very difficult. Like if I'm not seeing those gains repeatedly, it's easy to get kind of discouraged or get into like a negative kind of a mindset where you're not really feeling it and you're like, But even this is still pretty good because if you were then again able to kind of do this every time, you're going to grow your account. And you could do this with 3 trades, you could do this with 10 trades. The key is to kind of make those good trades and be effective in it. And I find that to be a really attractive model. If I'm only going to do like a weekly trades, right? And let's say I don't want to touch that money more than once. I want to keep the profit every time I make that trade. And I'm only going to trade a certain amount, even if it's a really attractive looking trade. And you guys are like, well, that's dumb. You should scale the trade based on how good it is. And I'm like, yeah, you could totally do that too. And I think that would be appropriate at a certain point. But I think in the beginning, it may not be appropriate because in the beginning, you don't want to lose. This is probably the only way to really mitigate or like prevent massive loss in the beginning. But I think later on, yeah, of course, later on, you shouldn't be putting like, let's say you get to 1,000 per trade. Well, that's still a lot. That's a lot of money per trade, but you might get to a place where you're like, you know what? This trade is really good. And I see like a huge setup like this where it's like a huge 4-hour divergence. I'm like pretty confident this is going to work. I'm just going to wait and like go all in or whatever, or go half in on these trades. I think in theory, if you did this correctly, even you could even have situations where you go down in your trade value, like I'm going to just add one that's going to be an equivalent, but like you could have a situation where the next time you trade, you kind of split the difference or you pool some together, maybe you pool these 2 together and it ends up being that you do 2 trades the following or 3 trades the following week. Maybe you set it like a different value. So in this trade, you go back down to 50 because you're like, I'm not really sure that I want to. You're just sitting on some cash. So you do like a $50 trade because you just don't think it's the best trade. You're not willing to risk 72, or you don't think that the 72 is worth it because you want to just keep some of that off the table. And then you do another trade that's like 150 or something, right? Because you want to put more into this other trade. I think that's totally reasonable. And that's what everybody does, right? We do it without thinking about it because you're probably, not everyone doesn't think. I think a lot of people probably think about it. But I know from my own experience, sometimes those numbers, they get a little bit away from me. And I'm like, why am I actually putting this much into this trade? Like I'm thinking like this is a good trade. I'm gonna put more into it, but I'm not really considering that like, well, this is causing me to have X amount that's actually in liquid, right? So that like in this case, there's some on the side. There's something like $40 or something still out here somewhere. That's just not traded, right? And that just sits there and waits for whatever. It's just a pool. And I think this is kind of one of those things where I just find it to be pretty interesting to think about numbers in this way as a linear path, but also as branching and as kind of systematic as it can be. And there's people who've built systems that work really well. I'm not trying to rewrite the books here. I'm just saying like, this really is interesting to me. If it'd be possible, I think you could totally do it. I know there's people out there that try to get those 100%. You also have the idea of like volatility, and I think that's another big part of it is like, is the market volatile or not? And sometimes the market's just not volatile. It's just boring. And when that happens, it's really hard to trade effectively with, very hard to trade effectively with options contracts. One of the biggest examples more recently of that was AMC back here. This was a horrible time to trade options. It was a great time to sell options. It was a horrible time to trade them because between the bottoms and tops here, there was almost no movement anyways. Like there was a few instances where there was some pretty good swings, but specifically like here on to about here, there was just nothing, even in the downside. I mean, it just was really crappy because the volatility was so low. It was so controlled that the options just weren't moving very much. And then a ton of people were just selling constantly. You had this ceiling above you nonstop of option sellers, like just constantly selling like slightly above, which is smart, but just constantly selling like slightly above, max pain or whatever for the week, or slightly above kind of this Bollinger Band kind of area, right? This bracketed area, like you're counting on it not breaking out. And it's smart, by the way. There's plenty of ways you can make money selling options that way, and it's pretty easy and lucrative in a sideways period. But that's like another strategy, right? That's like a specific kind of strategy. You'd be looking for those kinds of trades where you could do that, as opposed to what we're talking about, which is really looking for swings, So I was just thinking about that. So what are things that I would look for in stock screening, and like what would that be? And I think there's a lot of things that I would like to look for. I think that obviously, like we talked about this, volatility being higher is kind of a tough one because it could be dependent in some regards on the market. It's not always like as simple as like, I just want a stock that's really volatile. But sometimes like volatility is really good, on a stock. Like Tesla is just known for like having higher or bigger swings. I mean, and that's just one of those things that you can look at the stock and tell. Lower floats tend to be cheaper, like, and then they have like a lot more risk as a result because they tend to like get shorted to death if they're really not great stocks. But trends, obviously, like an uptrend would be good, or trend reversal, like that would be good to find. Divergence, and that doesn't have to be like that doesn't have to be RSI. It could be MACD or I use the MFI sometimes, like a money flow index, things like that. It doesn't have to be just one thing. Divergence in almost any of your tracking indicators are usually pretty much the same. There's bullish and bearish divergence for all of them. It's different for like a Bollinger Band or something like that. Obviously, you're not going to have divergences there necessarily, but you may have like, again, like an idea of it being like oversold or like a Bollinger Band depression where you're like below it or something, or extension below it. And then like time frame is really important because obviously like shorter time frames, these are questions that you ask, right? This is just kind of creating like a framework time frame. So I used to trade really short term. Like I would do like the 15 to 30 minute chart. I still think 30 minute is pretty good because 30 minute on a lot of tickers tends to be a really nice sweet spot between like really short and longer term. But I like 4 hour as well. I think 4 hour is really, really powerful for bigger moves anyways. So that's an interesting one to talk about because there's a lot of different opinions on that. And if you're somebody that's like, well, I just want to be in and out of 20 trades a day, you're not going to use the 4 hour almost at all. Like you would use it to kind of confirm trend, right? And that's important. And I think that's where we get into this stuff, like where you're looking at like macro trend. Is it going up? Is it going down? It's going up on a macro trend and it's having a pullback, but it's rising above its 4 hour 180 and it's still strong and it's not out of the channel. You have a much better chance of buying on a bottom on the 6 minute and making money as it pushes up on a smaller time frame. It's kind of common sense. If you don't know that and it's not common sense to you, now you know. Like if you're in an uptrend and you're trying to get a pullback, that's a better place, right? Is to confirm it on the higher time frame first using various methods and make sure it's not like peaking. Because sometimes that's the other thing is like you're at these UTs, as we call them, these up thrusts or these distributed moments, and you're like, oh, it's just another backup here, but it's like dying on the higher trend. It's like super divergent. This case, it's rising here, but the RSI is coming down and it looks weaker. And it's like, you wouldn't have seen that if you're just looking at the 6 minute or the 15-minute chart. You would definitely see it if you come out and look at the 4 hour, and that tells you like this is not bullish, And this kind of stuff where it's range bound, this is almost easier to trade in some ways because this has the classic. This is basically like exactly what I do on this channel all the time. And the thing is like I think that people misunderstand what I'm talking about when I talk about waves and stuff on an angle, because they see me doing stuff down here and they think I'm just like pulling out random stuff from my butt. But a lot of that comes from the very basic understanding of sine waves that I've talked about. You guys that have been here for a while know that because you've seen me do it like a billion times. I do that little diagram. But this is like a point in case kind of moment where you can see it visually very, 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 very simply. And almost always is spot on. It's a very like simple, again, understanding of the market, but it totally is worthwhile investigating it anyways. And it's this concept that like when you have the move, if you drag a line through the previous bottom, right, and you have to kind of know where that is. In this case, I'm using like a little S curve here. I don't even know if you can see it very well. It's kind of zoomed out. We'll zoom in a second. But if you draw it from the previous bottom through about the halfway point, it should give you an idea of timing. And we often say on here like, well, timing is one of the hardest things. Yeah, it totally is. But look how perfect this timing is. Like on this wavelength, it is perfect. This is perfect timing. So if you were able to buy off the bottom here and you had this timing that I'm putting on here right now, and I know I'm like charting it and you guys are like, yeah, you can chart it and make it look perfect. I'm telling you right now, like what I'm doing is just doing like the sine wave analysis that I've talked about. Like that's all this is right here. Is not complex. Like that's the top to bottom. That's the middle from here to here. This is the rejection point. We talk about those drop ledges all the time. I talk about why I use those drop ledges all the time. There it is. That's where it dropped down, finally like rejected off there. It comes back up later. There's another one, but that would have given you like the middle on an approximation. And then you can take that and use that as like a wavelength. And you have now a cross section here that essentially like fixes itself within the channel that gives you like a perfect top. So like I know this stuff, but the problem of course is like trading that is different because you're required to use time, right, to your advantage. This is a long trade. This would have had been a buy-in at 450. It doesn't seem very lucrative, right? When you're thinking about I have to hold this for 180 days. That's like half a year. That's 6 months. I have to hold this just to get 24%. Doesn't really seem worth it, does it? But again, the pinnacles of these moves are usually like in the midst of this, where you have these like kind of big swings. And those are the ones that you're trying to catch, which is really what Elliott wave does. So like sine wave concepts and theories, I guess I get a little bit of a bad rap because, and I've just been talking about it recently because of the call out of your chart should never look like this kind of thing. And I'm like, all I'm really doing is applying that same principle here, but doing it in a diagonal way and looking at where those waveforms are going. And like, I think it's fine. Like, I think it works fine when you do it right. But anyways, so like these setups could be confirmed by trends, or you could choose to trade sideways. It doesn't really matter. But in something like this, there is risk here. I mean, like we don't know that this doesn't make another low. We don't know that this couldn't come down. I mean, it's certainly oversold, but it's not so oversold that it couldn't possibly come down more. It's done it in the past. However, historically, like it doesn't do that, right? Historically, it hasn't come very far below where it's at now. Like this has been usually the low around 20, you know, and look at that. It looks like it's kind of generating a little bit anyways of a retest on an RSI bottom, which is kind of fascinating. Do I think this thing's going to pump from where it sits now at 245 all the way up to 330 by about September? Yeah. You know, and the previous chart I did had talked about that, like pushing up into October. And then we looked at the same exact thing on Tesla when it made that huge divergence. And these, again, are big swings that happen like really fast. And in this case, it was like this was a 1 day, 2 day, 27% move. But yeah, it would have been difficult, I think, to catch all of it, but not impossible. You know, not impossible. So yesterday in the market, we were talking about how like it was kind of reddish because there was a possibility of coming down again. A lot of stuff is popping off this morning. Not everything, but a lot of it is. Tesla pushed out above its... I'm still not so sure about Tesla, I'll be honest, because as much as I like to see this kind of cross up here, I'm still nervous that it's not actually moving. It looks like it broke out on the 1 hour for sure here. You can see that. It looks nice, but it's almost overbought already. And I'm not really confident that the volume is there. This is a real low volume still break. So even though there's a visual breakout, I'm not convinced just yet that it won't come back down and try to retest like 300. I still think it's possible. 300 is the first bottom here, and then it dipped low. And in theory, it could even come down and retest again where this gap is at 295. So I know this seems like silly because you're like, well, yeah, but you think it's going to go up into August. I do, but I think this thing can move pretty fast. So I'm not really convinced that it could not come down again. You know, it's Tesla. Who knows? Sometimes it just goes, you know, and nobody cares, and it just keeps going. The bulls on Tesla tend to be pretty darn bullish when they get going. So this is just one of those things where I'm like, meh, whatever. But it is up quite a bit. You know, 3% in the morning's not bad. Apple popped. Apple's not actually out of its trend though, and I'm not, again, it's the same deal. I'm really not convinced that this couldn't come back down again. Even though I said, and I did say, that I thought maybe Wednesday might be a change of direction for some of these guys, it still hasn't made that advancement yet. Maybe it happens today, and if it does, I think it's just going to go. I did talk about this on Apple, because historically, Apple's almost always sold off at earnings. At least in the last 4 out of 5 earnings, it's sold off. But then by the time the dividends happened, sorry, looking for the word. By the time the dividends happened, it has a reversal and it's like moving back out. So you can see like sell off, dividend, moves back out. Big sell off, dividend, moves back out. Right here, sell off, dividend. And in this case, the dividend is already up. So it already had made the rise before the dividend, and then it sells off again. That's not really the best example, but it results in a higher low and then keeps going up. I think there's like one of these where it's kind of the opposite, but this is the same thing. Earnings, huge sell-off. And in this case, it almost sort of fills this gap by the dividend date, which is interesting. So what is that telling you? I'm not really sure what it tells me, except that maybe they're trying to shake people out and get more shares before the dividend happens. So they can get people to sell and then buy up their shares and kind of boost their earnings, I guess. I don't know. That's the only thing I can think why an institution might religiously kind of sell off and then buy back in right before dividends or at dividends. So anyways, they're not all the same. I think this is one of the examples where it's just all up. Yeah, it kind of dropped a little, but then rose. This one, it actually rises and falls, and it resets itself pretty quickly back down to where it was. So it really just, I mean, part of it depends on the TA. I'm not going to say it's all the same. It's not. But like I think it was like at least, it was like 5 out of the last 6 or something like that. I did the math. I was like, that's pretty good. Or I checked it out. So this would have been the similar situation where it double beat on earnings and then dropped. And now it's kind of coming back. Maybe it's a situation where it's rising up into the dividend date, which is August 11th. But I'm not particularly concerned just yet. I think it's entirely possible that it could come back down again. And the market on the whole, obviously I'm looking at some big ones. It's going to reflect a little bit in SPY. And SPY was one that yesterday I was a little bit worried about because when it advanced here, it did push higher, but then it was having some trouble. By the end of the day, and I had probably stopped streaming by around here, I wasn't sure, so I had put on here that like, well, I could see it dropping still since it already kind of punctured the creek once. Now that's a really light creek, and I said that yesterday. I said, it's kind of like just 2 hits, so it's not really a great one to go off of. But certainly like this seemed possible to me, that if it doesn't hold support, it goes back up. And the only alternative was it makes another cross here and just goes, which seems to be the case. Well, couldn't it just be doing a double top and then drop all the way down? Yeah. I don't like, you kind of keep going and going and going on these in terms of situations, but it's sort of common sense, right? If this rises up and it has weakness in that top, then I think, you're looking at a higher probability of coming back down. We don't know yet because we haven't gone up there, but this guy. So if this comes up to the top and it like peaks at like 633 and the volume is garbage, right, and it doesn't consolidate well and then break back out, you're probably going to see instead like a high volume top and then really crappy buy-in, right, that's really weak, and then a high volume sell-off that comes back down. And those are simple things to look at. I'm not like gonna crystal ball it. I'm just saying like this totally would make sense to still come back down. Even though it's broken out, it looks more bullish today. The volume is so-so. We'll see. Maybe it'll pick up. I hope I'm wrong about volume right now. I hope it picks up. That would convince me otherwise. But I was looking at UNH and I was thinking about what I was thinking about last night. And I was like, these setups, they don't come around very often, but they are much better setups than some of the others that we see. I always have thoughts on GME. Always have thoughts on GME. So we should talk about GameStop's fundamentals because they've introduced some new ideas in the recent months. I don't know if you guys saw the initiative. So they had the GameStop push button arcade, whatever it's called. I don't know exactly what that is just yet. I think it's called Push Stop Arcade, or I don't know. I'm forgetting the name of it. But it was just a teaser image. But they did something recently that cued people into what might be, and I'm not a big let's not figure this all out kind of guy. I don't typically, you guys are like, yeah, you are. Like, but not with like this kind of thing, I don't typically talk about too much the, like, hey, what are they doing with their business model kind of stuff. But in this case, it is kind of interesting because they introduced this concept, this push start arcade thing, and then not too long after, they talked about their, so they're doing more trading cards, right? And now they have, I want to say it's like, is it PSA or something like that? PAS or whatever. PSA is like public service announcement, but it might sound the same. I can't remember. But it's the trading card certification people. So if you have a trading card that is sellable and you want to sell it, you can send it in and they'll grade it for you. And that grading service costs a little bit, but they give it an official grading. And a lot of serious trading card people and collectors, if you don't know this, won't buy something unless it's been gone through this process because it's a standard that they've created. And so it lets people know like this is mint condition versus it's got aging or it's got a chip on the corner or whatever. And then they also give it a value to some degree based on that. It's implied value, and then because of the wear and tear on it and stuff, it's like, I don't know if they grade it with number system. I haven't looked at it in a long time, or it's like letters, like, it's an A or it's a B, but it's basically just quality. So GameStop started doing it in their stores not too long ago with like a partnership, if I'm not mistaken. And they said they announced they've already done like millions of these. It used to be that you had to send it in, because I remember about 3 years ago during COVID or whatever it was, whenever COVID was, that was about 3.5, 4 years ago. I looked into it. I think a lot of people did because they were bored. And I looked into it and I was like, I have all these trading cards from the 90s. And I was looking at how do you even get these things graded? And you had to like mail it in. And then you would send it back. I was like, that's a lot. Because most of the time you wouldn't have access to any storefront with that. So you could if it's if there's a local place that does it, but a lot of times you'd have to mail it in. I was like, I don't know. But so the idea of a partnership with GameStop having some brick and mortar locations, although they've reduced those that aren't performing as well, it's pretty smart. Well, what this new initiative is that they're doing something like that, but they're doing it with purchasing online. And that's fascinating because basically it's like you're buying a card and you don't have to claim it to sell it, if I'm not mistaken. So instead they're like holding on to it for you and your name is just on it. It reminded me a little bit of when you like buy a star or something and you like buy a star and it's like, all right, well, your name is on it, but it exists somewhere else, That's what it reminded me of. I don't know. It's probably a dumb example, but it's interesting. So then you can request it, I think, if I remember. I read about it. Again, my memory this morning is crap, so I apologize. I told you guys I'm a little tired. I read about it, and they're doing this in partnership with GameStop. And so why does that matter? Well, it matters because they've largely said recently that they're moving into the trading card business more and more like collectibles. This isn't just trading cards, but that's a big part of it because they see that as a really huge money-making opportunity. They're not wrong. If GameStop were to become kind of the quintessential, like this is where you go, for all of these kind of collectible needs, it definitely could be a huge, huge, huge part of their business in the long term. I don't disagree. I don't know if I like the idea of completely getting away from like video games, for example. But I definitely could see why that's super lucrative. I mean, you see these shows on the internets about and on TV about these collectibles, and like tons of people do that stuff and are interested in it. So the idea of buying and like having owning these digital assets, which aren't digital, but they're real, and it's just represented by a digital kind of token or something like that, where you own this thing. It's pretty fascinating. I think it's really interesting. It allows for you to trade without ever having the object in your hand, which is kind of strange. But I was thinking about that and how the arcade idea might be implemented if they're doing something similar with the idea of like digital trading. And I'm not really sure what that looks like just yet. But I thought about it first. I was like, well, GameFly did the rentals, and that was mailed to you. I don't think that's what GameStop would necessarily do. But I wonder if they might do something similar, like where you buy a product. Because right now, if you buy like an online game, you can't trade it. Like, it's only connected to you and your system for the most part. There are some situations, like I know Nintendo did that thing now with the game share or whatever, the digital, they did something with like digital, they're calling it digital game cards, right? Where you can eject it and then put it in another system if you own that system. So it's a way of moving your game from one system to another. But as far as I'm aware, you still can't take that digital code and sell it to somebody else. You could sell the whole system with the code on it, but it's still going to be connected to your account, which is linked to your digital account. So I'm unaware. If there's a way to do it, I'm unaware of it. So I was thinking about that. I was like, yeah, that's kind of where the market's been going. But then they also introduced with their new console the key cards, which is garbage. Which is you buy a physical game, but then it has a key on it. So you're really just buying a download link, which is dumb because they were already doing that. Like, they had already done that. You could go to the store. You could do it with a lot of games and different systems. You could buy a download link. So I was like, what's the point of having the key card thing? It's kind of silly. But it's this idea of having like a physical connection to it. I think that might be not that bad of an idea if GameStop did something like that. And I wonder if that would be very effective. So if you buy a game and then you can download it, but when you're ready to get rid of it, you could somehow sell it. And you don't ever have to have the game. But if you do want the game, you can ask and you can request for it to be sent. And it's the physical copy. And you no longer have the digital access, you have a physical access. Then you could just resell it if you want to. I think that's a really interesting idea. So I'm not sure if that's what they're going to do. And that's coming from my brain. If somebody else already said that, then we're just thinking the same things. But I was thinking about that too. I was like, well, that would make sense because if you're somebody that doesn't really mind the digital code, but at some point you want to resell something, in the short term, getting a digital code for like a movie, even a movie too, or a game or a product, but then having the ability to say, all right, I really kind of just want to have this now. You did buy it, so you do own it, but you don't want the digital code anymore, then you could get that. I don't know how it'd work because they'd have to get rid of it. Like, you'd have to basically remove it from your system. Otherwise, minus the save data, I guess. Otherwise, you'd have 2 copies of it, but because then you could just sell the physical copy. So there'd have to be some kind of checks and balance there. But I find this to be an intriguing idea, and I wonder if we're going to see something leading up to earnings or at earnings about it. I think that people really want to see a catalyst, and I know that I'm not a big catalyst guy because I typically say, and this is true, I believe it's true, I don't think this is wrong to say, I do genuinely believe that you really don't need like a catalyst. And what I mean by that is, like, in order to do technicals, like, you don't need to know exactly what it's going to be. But I do think that something about this push start arcade business between now and earnings would justify a run into earnings from where we stand, or the finishing of, let's say, a spring into a big run up. I don't think that you're going to have maybe an easy substitute for that. Now, that being said, last time it did a big dump like this, once it finished, and it looks pretty similar, you can see there's similarities in the bottom. You're like, no, I can't because you got too much crap on your chart. Well, touche. You're not wrong. I do have a lot of stuff on my chart. I can get rid of some of this for the sake of space here. I will. It's pretty similar. I mean, there's a similar build out on this bottom. You can see there's like a bounce in that goes lower and then it pushes up higher. And then this is what happened last time is there was a bounce in, pushed up higher, and then it came back down and made a higher low, and then it rocketed. Certainly that's a possibility here. It is a lower RSI than it was here, so it's already, actually it's already kind of like a hidden divergence, believe it or not, because this is a lower price point, and this is higher up. So it's like basically we're finding that we're getting oversold at a higher price. So at least for now, that could be seen as a hidden divergence, which is a positive signal, potentially, that if we did the similar or same kind of bottom, to some degree, it could be, just as lucrative. I'm questioning the idea of like, what if it looks the same? You get this kind of wave up and then it breaks up, and it does go up, but it doesn't go that high. You're kind of stuck in this limbo space around 27. That's where I think we run into problems. No, I don't think there's a coincidence. You asked, do you think there's a coincidence the AMC drop ends on August 22nd and your introduction of APE on August 22nd and AMC on August 24th? No. I don't think it's a coincidence. It could be a little bit of smoke and mirrors, You get people accustomed to something and then they are easy to mislead. It could be smoke and mirrors. But the reason why I'm not convinced that it's smoke and mirrors, the reason why I think it's relevant is because in this whole schematic, right, one of the most consistent operators that we have is Vanguard. And years ago, when I first started, looking at AMC, I looked at the original bottom, and I remember this very distinctly because I did some analysis on this for a number of reasons. I was looking back, and I was saying that my thought was, I think whoever initiated and it had to do with a lot of things. I would have to find that video. I don't know where it is. I have no idea. Okay. But I went back and I looked at 13F filings from 2017 to 2019. And even though it seems a little silly, because looking back, it's like, well, I know what this is, so I'm pretty sure this is true. I think that what I found was more or less just a confirmation of what I already later came to see as like a technical reality, which is that the operator that basically took this thing up was probably already here, or was almost definitely already here before 2018, which doesn't seem to make a lot of sense. But then at the same time, I'm like, no, it makes perfect sense, because Vanguard, it's like contrary to what makes sense to us, but it's like Vanguard was one of the primary owners back here. Later, you find out that, and I don't know if maybe they were like the major short owner and then they didn't mess with it, but later you find that they make a bunch of money on it, right? And they start re-entering positions again right here. And this is not a coincidence. There's no way. There's something about that original low that they really liked. So I think what it is that when it was below here, they were entering into short positions, but they had shares, and I thought this was really strange. This is the area right here on the bottom. This is part of the reason why, and I'm flipping around a little bit, I know, but I'm trying to get to the point. I'll do my best to be brief. Vanguard re-entered positions right here. I always thought that was really strange. Like, I thought that was super bizarre because it was on the way down. And I was like, did they really enter positions there? Because the 13F filing seems to suggest they did. And I was like, this doesn't make any sense. What in the world would cause you to... Because BlackRock sold positions on the way up on this March run up. And it looked like Vanguard actually entered into positions on this run up. Now, 13F filings have don't have to be filed like right away. In some cases, they're not for a little bit. You can look at like when those purchases were, or at least approximately. They do have to be filed within a certain time frame, right, to be legal. But I thought it was really strange that Vanguard got in apparently in this region when it went down quite far. Until I started thinking about how AMC ended up becoming like the most lent out share in the whole market. Like the whole market was the whole stock market. AMC was the one that lent out the most shares. I think that's fascinating. They made the most money, I should say, on lent shares. So I think part of it is that. I think Vanguard is very comfortable owning positions and allowing for shorts to do their thing, knowing that they're going to have the potential for exit later. It doesn't really make any sense for Vanguard to have a buy position anywhere here, but no like sell position. Because ultimately it did come down low. Like ultimately it spends most of the next 6 months or whatever it was, 5 months, wasn't that long. Maybe it was like 4 or 5 months, but it spends most of that time below these values, you know? So I was like thinking like they're probably buying a lot of shares and then just lending them out to shorts, playing the long game, knowing that they really don't have to do anything because they're gonna bring it back up here to exit positions. And I think that's part of the reason why we see distribution happen, obviously, is that you're taking it back up for liquidity purposes. But it's probably also in part due to, hey, we've got a bunch of shares averaging in this region. We're really just ready to sell them off now. We've been lending them out. Shorts have loaded up. We're ready to go. We've loaded up. So they bring it up. They sell them as people are buying into this FOMO here. They sell their shares back and they open their short positions and then so on and so forth. I don't know the exact numbers and how it works for them personally. That would be silly. But I found it to be very interesting that this region, that all of that happened, harkened back to this original. Really, it's an LSPY. It's basically a bear flag, right? And I thought that was pretty fascinating. And then in addition to that, and I'm getting to the point here, okay? In addition to that, they did the same thing back here. I thought it was really odd to see that they had 60 million shares that were sold from here down. Like they still had a ton of shares in this time period. And this is the year that AMC like topped the charts. This is part of the year that AMC topped the charts for lent out shares. So they did the same thing. And it makes sense to me that they did the same thing. Why? Because what? Because this is an iteration right here of the same thing. Oh, yeah, because iterations are behavior patterns, right? So when Ape was created, they just iterate the exact same thing, you know, and they run it through the cycle again. And they did it 3 times. And I was thinking about how, like, it's almost frustrating because you look back on it and you're like, well, yeah, you knew that, but then you didn't quite know what was going to happen still. It's like, well, no, I didn't. But that iteration was done multiple times until it just wasn't. And then there was a big change in direction. And that's really what the big takeaway is. But the second takeaway has to do with the levels themselves, because these particular levels that Vanguard was trading around evidently are pretty darn significant to the overall chart setup. And later, when I came back and looked at the timing cycle, it's very significant, right? You come back and you look at the timing cycle here of the ups and downs. This isn't exactly rocket science. There's a very simple timing to it. It goes from May 19th to like May 19th, like May 13th. It's a 2-year exact cycle. And somebody asked me once, they said, well, why do you think that that matters? Like, it could be just random, or why do you think that would repeat? I think it would repeat because they've already done it and it worked the first time. And if it ain't broke, you don't fix it. But also because this cycle in and of itself is essentially like representation for what happens as we move forward. you can see the cycle basically comes back around, you know, it makes a full swing. So I've talked about these before, and I've said, like, look, man, I think that the market runs on waves, and this is what I'm talking about. It's like the second you sort of start second guessing every little thing, you kind of become a like a patsy almost. You have to just kind of sometimes just take it for what it is. Like, this is a pretty clear like wraparound where this is like a middle hinge on like a channel, and I think that's true. I think it's more of a channel than it is like a sideways action, which is why I've talked about that channel and then the subsequent shift value that happens, right? Because ultimately what happened is that the channel loses a certain trajectory and it goes to a significant low. But you have this setup right now where we're basically doing the same thing we were doing back here, but you're doing it in like a slightly different channel because of the shift. Now, that doesn't mean it goes to the moon. And that's what I've been saying about this, is that if you shift it down, it makes more sense. If you don't shift it down, it's going to break out and be like super crazy bullish. But I had looked at it repeatedly, and what I found was that this value, so again, Vanguard back here, right? Vanguard right here. This value was the highest probability value, in my opinion, of them when they come back up, right? Like, where are you going to go when you come back? I'm going to mess this up, but I think it was like in the middle of this. This was an anchored wave, and it represented essentially where are you going to come back, you know, and when are you going to do that? And I'm really fudging it up right now. I had done this repeatedly for the last couple of years, and I talked about the, I'm messing it up as we speak, but I talked about where I thought that was, right, and how February 2026 seemed like a really important date. There's some dates that are a little later than that. They're not all exactly the same, you know, and it does depend largely on perspective, like how do you think that it should be charted, things like that. I'm not going to sit here and say that there's no alternatives to my charting. There certainly are. But I think that on the whole, what I was looking at was really the build out here. What's the main angle? And I'm kind of screwing it up. I keep pulling it back because I'm looking at the chart. I'm trying to get this point, and this point lined up, but I'm not getting it. And that's where I got that's the whole reason they originally got the March 2026. And when I started looking at it that way, I was like, oh, well, so that angle that's being used, weirdly enough, matches some other things like in the past, you know, and they were doing this in a very, again, particular way. And it's like, that to me is not a coincidence. Like this right here, this is just the chart as it should be. The manner in which they travel through these things is just behavioral pattern. Like, how do you go through these, right? And this was the father of all charts, by the way, which I did a long time ago, which is bonkers, bananas. I don't think the father of all charts made a lot of sense, because what I had imagined at the time, here's why this didn't work, if you're wondering. What I had imagined at the time was that the bottom here, this could form into our bottom. It was close, but no cigar, okay? That this could form into a similar bottom and then reascend. And the idea was that you're going through the same distribution twice, here and then here again. I know I'm marking it up a lot. But that became a model that I used. I called it the father of all charts just because it was a joke, because I had the mother of all charts, which I didn't really like very quickly. And I thought that the father of all charts was actually probably a better understanding because it had a simpler explanation for timing. It also had a simpler explanation for why we stopped at the levels we stopped at. Because you could take any of these and just kind of put them up there, and it was like, yeah, there it is. There's the halfway point on this whole structure, right, on the walk down. This is like Cattier 101 type stuff, you know. We use this stuff all the time, and I was using it on a pretty small scale. When I took it to the big scale, I was like, oh, well, apparently like this was applied on the way down and for these breakouts, and this is one of the biggest ones right here. But what the problem was is that right there, and I don't think this is a coincidence, this is August right in August of 2022, you have ape introduced. This ends up being the middle of the bigger structure right here, which is fascinating. Like this is like a macro structure coming down, right? And this is the center point. And in August, they introduce ape and they dump it, and all this other stuff happens. We could talk about everything that happens around that. We're not going to talk about every little thing. But like that becomes a question now of like importance, because you're like, well, why there? Why drop it through there? Why not drop it beforehand? Or why not drop it long after that? You know, you could ask a number of questions about that. I think it'd be legitimate. But a bigger part of that reason is if you go back and you look at the original breakout value, the simpler explanation is simply that this is just a rotation of positions, because you can see like the this is essentially like the exact same. This is the wavelength right here, and you're seeing that like trajectory of position, like boom, 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 right? So you can take that same wavelength and apply it again to this whole thing if you so choose. This is the direction that Vanguard is trading it, but look at where that breakdown happens to be. Is that a coincidence, or is that just because that timing matters to them for other reasons? Then you had to look at this, and I'm like, yeah, that's basically the halfway point here. And if I were looking at this from a big perspective, then I look at like macro creeks, which you've already come down to on the big picture. That's already happened. That's this bottom one right here, right? And I would look at the wavelengths. The bigger issue is that the wavelengths seem to have changed, or they seem to be, not the timing hasn't changed, but like the distances have changed. The percentages have changed in terms of direction, because we had a shift value. There was a market shift value that happened because of ape, but then also because of the reverse split. So then we have this 226.36% shift. And this value right here, this is super important. This value right here. So previously, this is the icing on the cake. This is where it finally comes together. So you're looking at this huge schematic and you're like, well, when's it gonna come back up, right? Well, if you look at this as like a large rotation, like a huge rotation, right? Then what I would normally do is say, well, where does it triangulate back to the value that was trying to be kind of lapped around, which is right here? It hasn't retested that value since ape's creation. Like it hasn't at all. It's still like right there. That's the last time we checked that value. Maybe it will never go back to that. But when I look at schematics, and I've done this a lot, when I look at schematics for this setup, I'm getting like a nice sense of clarity here. When I look at schematics for this setup, I've said this before, there's like almost no time where you don't come back to check that drop down level. We talk about that cliff like all the time. It's the reason that I thought it was going to go to 4 over here, and it missed it. And it was like it didn't get there for some reason, you know? But I was like, it should go back to 4, and never checked it, mainly because when you see these wave schematics, this is just part of the way the wave builds out. I don't know if I'm 100% right about it, because all I'm doing is looking at what I see as visual cues and mathematical cues to determine like, yeah, this is like the halfway point on an S curve. This is the place where this builds out to the upside. But ultimately, like a lot of this stuff boils down to Wyckoff and then wave schematics. If you go to a Wyckoff, this looks a lot like a Wyckoff chart if you go to like a Wyckoff analysis. But it also has to do with just wave schematics, right? And the fact that these are bouncing off of particular levels, this just tells me like as this thing travels through and tries to find whatever it's trying to find down here, it tends to run a pretty tight ship in terms of proportion and directional movement, right? And if it has a breakout, it's going to happen right here at the end. If it doesn't, if it has a breakdown, it also happens right here at the end. And we've come to know that that's actually usually where the middle of the cat ear is, or where the cat ear is kind of having some problems. And it makes sense, because if you look at it on the big picture and you draw it coming down and breaking down out of this channel right here, hey, that's your cat ear right there. It's the same thing you talk about, like a crazy person, right? It's right there. Yes, it is. So that would be like the breakdown point, but it's also the breakout point. And if you go to the upside, that's right. you said this a minute ago, because you said if it goes to the upside, maybe it comes back up to here first. Yeah, because usually if this is where it kind of comes down and it can hold on and bring itself back up, if it breaks out again, it's going to go all the way back. And I'm overlapping my charts, but it's going to go back basically to here. You're going to get a move. Really early on, I called it the R1. I don't know why I called it that. Reaction 1 or something like that. I don't remember. But the R1 was always this almost the same length as this first move, and it was a huge move because it's coming through the middle. And so then you look at this as a wave schematic. It's not that complex. It's very straightforward. You look at it as finding supports and resistances or as a bottom buy-in. It's extremely simplistic. Like, you don't have to make it complicated. This is the wave as I would see it, and I'm going to do it with, I guess I'll do it like this. It's just, there it is. That's 1, 2, 3, and then 4. And 4 can go either way if this is the way you want to do it, and that's the way I'm choosing to do it, so I'm going to do it this way. 4 could either do this, in which case it's rejecting off of that one that was wrapping around, or in some cases it doesn't reject, right? And this happens, and you get what we call an M cross, and what happens is that it hits here, and then it starts again. And this is what looks to us like a cup and handle, even though it's like a 1, 2, 3, 4 on the M. This is essentially like the pattern of bottoming that you see. You know, so there's folks out there, again, that would say like, well, this is too complicated. You need to like make it simpler or something. And I'm like, well, I don't know if it's wrong to do it this way, but it's just the way that I started doing it. Maybe it's not the best way to do it. I would admit that it's possible. This isn't the best way that there is to do market analysis. Maybe it's a little too complex, but it's super straightforward if you understand like the rigidity of this particular structure. And like this moment right here is so significant. And we talk about stuff like making higher highs and making higher lows, and when does that happen, and where does it need to happen, and doing the weaknesses. Where are the weaknesses? Are there weaknesses right here? If this has an early sign of weakness, I don't think it'd be right there, but if it has an early sign of weakness, you know, like these are things that can cue you in to tell you that, yeah, this is not necessarily going to go our way because it's starting to do this thing where it's losing traction here. So everything kind of boils down to this last like moment, and you get that right here. You get it at the end here. It happens the same way, and it fails, and then it just dumps off a cliff, right? And it's like, geez, how could you be so wrong, right? That was the way I felt about it. I was like, how could you be so wrong? It's super easy to be wrong in that moment, because if you misread this and you didn't see this as a sign of weakness right here because you didn't have the right line in place or you weren't using the correct whatever. And there was, by the way, 2 signs of weakness here looking back, even if you didn't know this as a macro, because those lines existed. You could have easily misread this and said, well, I think it's breaking out because it came back down like it would, but you misread that there was no sign of weakness if you didn't think there was. There's a little dip right here and a second dip just after right there. And then it's this up thrust, and then it dies. Right? And then it dies. So like I look at it, I'm like, all right, I totally understand why I screw this up and why this is such a dramatic move. And it's probably best explained by the decision to do a reverse split. It's entirely possible, even in the way that I'm telling you right now, like I'm describing this as a potential sign of weakness, it still made higher lows. It's entirely possible that there could have been a different situation. I don't know what it would have been. Maybe the judge during decision went the other way. I don't know. Who knows what that would have done? It's completely speculative. But it makes a lot of sense to me that this move in particular, when it happened, was so bad because we were expecting it to move up and have like a pretty huge retracement back to all-time highs even. That's like where it would have gone if you just flipped the move around. And you're like, geez, that's really bad. It's super dangerous. Yeah. That's the thing, though. When we get to this point, I've said it repeatedly, when you get to this point, it's always like a split decision. I've been saying it more recently because we were coming into that point again, where you're getting into this split decision moment. You really don't want it to continually choose down here in this moment, because if it continually down, 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 or if it pops up and then drops, it's bad. That's why I don't want to see an up thrust here. I've said it a number of times in a number of ways. I don't want to see it pop up first, because typically if it does that, it's not good, right? Typically if it does that, it's weak. I want to see it go ahead and capitulate and hit the low and finish with strength up, then complete strength tests in a positive way, as opposed to just popping, going straight up and then right back down. And it's totally possible that happens. I do not want to see right now, especially, look, this is an SOW. Do you see this? It's already happening. Now, you might say, oh, that means it's going to go off of a cliff. No, that's not what it means. It just means that this is weak. It has not held. I'm not talking about lower lows necessarily here on the big picture. I'm talking about the fact that this trend didn't hold is a really important signal. It should cue you into this idea that, like, okay, the next time, and I've got this line a little wrong, but the next time that we come back through here, we're at serious risk of capitulation. I might have already gone through that. I don't know. I may have missed it yesterday. Looks like I did. Looks like it dipped. We're at serious risk of capitulation. If this goes up and tries to go too high, too fast on earnings, we're in big trouble, because now you've made a weakness that basically supports the idea that you could come up, have a quick up thrust, and then dive. August. Dead. Well, that's backwards, Booksy, than what you're saying. Yeah, it is. But that happens when you go the other way. What happens when it's bullish is that you don't screw around with stuff like that. Instead, it doesn't go too high too fast, because the bulls are still in control of the buying, and they know that the sellers aren't going to be able to, or they're not going to drive the short selling too fast, right? The short covering too fast. They're going to steer the ship so that they get the low and get the liquidity they want and then leave and never come back. It's controlled in that way. It's kind of boring too, usually, because it ends up being really stagnant. That would be far better for us. Now, the question that brought me into this huge tirade was like, well, why do you think, or do you think it's important that it's August to August to August? I think it's very important that it's August to August to August, because we have a systematic 1, 2, 3, 4 kind of thing where you're getting those bracketed moves in essentially even intervals. Now, it's not perfect, but you're getting them in essentially, again, the same way in each bracketed interval. And ultimately, like, the measuring here of 2 years is not insignificant. Like, I find that to be extremely significant, that it's like 2 years here and then 2 years to here, almost exactly, minus a little bit on the end there, maybe because of the Judge Zern thing. And likewise, this wave, I think, also works. It's not conspiracy theory, okay? It's not me saying that, like, there's something innately special about August 22nd because so-and-so says so. I don't think that really matters that much. I think it's just the way that the pieces fell in this particular case. It is where it is, right? If you look at the even intervals here and you look at, like, where this is going, you can tell, like, this is going to be the pattern potentially moving forward going into August. Not because, again, these time frames are perfect. They're not perfect. But look at where this lands us. This lands us right over here in January 2026. Where do we think the second part of the move is? January 2026. Is that not weird? It's not just because that number has some special meaning because it ran in January here, right? Weirdly, though, the first interval would be August. that's the weird thing about it, is if you look at that this way, you can see that doesn't even quite get to, that's the second move, not the first move, right? The first move was actually earlier than the second move. It was right here. Puts it into position to run up from that spot. That, when you backdate from January, gives you what? September 11th. Something like that. September 6th. Where do you have your run up on the chart? These things, in my opinion, are not about, again, conspiracy ideas or anything. I genuinely think the operator is trying to bring it back to certain levels at certain times. So what makes the most sense to me is that basically we're doing like a leapfrog, and essentially like every year we're basically revisiting that same spot. Basically, I mean, there's some small changes. This one actually pumps up high and hits it in July or whatever it is. This motion right here, though, which would be the last one right there, I'm trying to go far enough. There's a weird little gap zone going into August. Not sure what to make of that, and I don't really think I care that much, to be honest. Do you guys remember that upthrust? It went back and tested this marker right here. Now, during regular trading hours, we didn't see it all, but there was a huge amount of volume. And I think at the time, Stockfather said something like, I think it looked like a operator. I don't know how he would gauge that. I'm not going to like put words in his mouth, but he said it looked like an operator changing their position, like swapping out a position, where you have this like massive volume candle, but then it kind of resets a little bit before the day's done. It went back to the same value. Like it was a resetting of those positions. So you're thinking we're going to go all the way up to $72 again, right, Booksy? Look, if the chart moved exactly the same way that it moved over here, it is possible. But the only way that happens right now, in my opinion, right, would have to be some like first move that's very high, like 1961 high. It'd have to be like $20. And then the second move would be like to year 72. The reason why I don't think that's the case, and I've made this a very like kind of long-winded argument, but the reason I think that's not the case is because I'm not so sure that this value is actually accurate, because we've done the shift and we found that shift value seems to be at play. And more significantly, when you go back and you take that into consideration and you look at like where some of these original values were, it's like, well, that could have been the same spot they were aiming for at like 72, like kind of this reset value, or like 67. But then there's another value that's also used quite a bit, and that's this value of the original bottom. And that whole region right here would be in question for me. I'm like, yeah, I think that whole region has probably been the long-standing kind of wraparound target. That's the way I see it. If you're going to leave it behind and never go back again, it's possible that this was it, and that's the last time it's going to hit it, and it's just done. It's possible. And they're going to start something new down bottom that never gets back there. I think it's possible. But normally, again, when I see that, I'm almost not, I don't think it's like a right thing to say like perfectly works, because it doesn't perfectly work. It almost doesn't make sense to not go back. The reason why I didn't think this was enough, because I don't think it hit high enough, and I could be wrong about it in the end. It only came up to, if you use the shift value, it only came up to like 29 or something like that. It hits like less than 13 here, but it hits like 29 here, right underneath. So it checked this value when you use the shift, which it didn't actually come back up and retest the floor, which was a bit higher. It's close to it. It's pretty close. But close but no cigar, right? And it reminds me a lot of really like the same pattern that we see on the micro, which is that you get these setups where you're kind of backing up and you think, oh, that could be it, but then it comes back up later in full force. And the same thing happens right here, where you had this kind of early reaction, right? And people were mad at me at the time because they said, well, like a couple people were mad. You're always wrong. It didn't go to 4, it went to 370. Like that was a huge difference. But I was like, I still think it's going to go to 4. And at that time, it's like, man, it's really hard to talk about why you think that's necessary, because it didn't actually come back and back test this ledge. I was like, I think it's still going to go to 4. I think that's just the way the operator has been working. I wasn't wrong. I was proved right about that. I was proved right about coming back up to near 14 when we were dropping down, because these setups are such that they're leaving stuff on the table. They're not doing proper back tests. I don't know why exactly they're doing it, but it probably has a lot to do with, again, the overall look of the moves and like whether or not they want to continually short it down versus taking it back up in the short term. Anyways, I can't imply much more than that, but I would say that this particular setup definitely gives me the same vibe as like we're coming back up, we're making these like hits, right? This would be like the comparable way of saying that this is essentially what I'm trying to say is like this movement right here is like not exactly the same. I should have drawn it differently. Not exactly the same movement, but it's a really similar move to what we see here, where this didn't quite come up enough. And then later it just like rockets up and goes up to where it needs to go up to, right? And you could do it a couple different ways. I don't want to make it sound like, again, one size fits all. It's kind of a silly way to do it. I think this still didn't go high enough. So I was saying, like, when this went up, I was like, I don't think it went high enough. It did come above here, and it did go higher in extended hours, but I was like, why didn't it go back up? I kept asking the question, like, why didn't it go back up and hit, like, 1377 or that gap at 13? Like, why didn't it at least get that? It didn't even get that, you know? The drop ledge at 13. It didn't go up to 14s and finish that. It hit a retracement value, which is important, but like, I was really concerned. I was like, I don't really understand. I don't think it came up high enough, which is part of the screwball reason why I thought this might come back up again right after it hit, and then it didn't. And I am of the opinion that it's entirely possible, if not plausible, that when you look at that as the same kind of motion, because remember, this dropped off a cliff right before this. So check out this motion right here when this dumps off a cliff. This is the same like wave schematic that we're talking about on the macro too, right? Potentially, although it would be way longer. This is the same kind of schematic, right? You have that drop down from like way up high. When it finally distributes, it dumps pretty far. It has a reaction, early reaction. They're pretty close to each other. It builds out a level right here, right? And then it pops up and goes a bit higher. Now you might say, well, yeah, but in previous times you said this was probably that same reaction. I think that's appropriate too. I think you could use either one. The thing is that because it's iterating, it hasn't finished. So you have to kind of imply what's next because it hasn't finished. It's just doing the same thing over and over again. And so we don't really know what's the next action per se. The only thing I could say for sure is that, well, if it's continuing to iterate, that's a good sign because it's going down in iteration in this case. It's a bad sign that it's doing these weird upthrust things. I don't like that. But I also think that, who knows? Because if it makes the spring, I don't really care. As long as it makes the spring first and goes down first, I think we're in a much, much better position to have strength moving forward. So you're saying that it's possible that it goes up and it's possible that it goes down. I love that comment. It's like my favorite comment. You know what? I've never heard that before in my life. I've never heard anyone say that. You're only thinking that because when I say what I say, when we get to this point, and I say that I don't think it's a toss-up. So let me clarify. You're only saying that because when it gets to this point, there is this equal parts chance. It looks like there's an equal parts chance. It's equal parts chance in a blank diagram like this because I can decide what happens here. It's not equal parts chance in actuality. Let me repeat that. When I do a fake diagram that's made up, this is made up. I can make it look like whatever I want it to look like. I'm doing it for the purpose of explaining my line of reasoning, which I think is appropriate when you're using a line of reasoning that may not be as commonplace as like a bars pattern or as commonplace, which this kind of is. Maybe not as commonplace as like reading Fibonacci's or something like that. I'm trying to explain the reasoning behind why I think these levels are pivotal. It's not that complicated. These are pivotal levels. You can mark them off on your chart. These are pivot levels that you need to mark off when you're considering when does it move and how far does it move and where does it go. Those are the pivotal moments. 1, 2, 3, maybe more depending on how you break it up. These are the wave peaks, the wave crosses as we call them. These are the different points of interest. When I'm explaining it, I'm telling you, yeah, at this point, it could go up, it could go down. That is not a cop-out. That is an explanation of fact. That is not me saying that there's no way to know. That is a complete misreading or misunderstanding of what I'm saying. That's like saying at any point in the market, you could say that about any given day. You could wake up in the morning and say, well, the market could go up or down, but it's sure going to go sideways. Like we haven't heard that before. Everybody in the market knows that's the way it works. Nobody would start a YouTube channel to get on here, make a bunch of silly diagrams, and then say it could go up or down. Guess we'll have to find out. I don't have a crystal ball. There are times when I cannot do the interpretation to the best degree. There are times where I get stuck. There are times where in my human capacity, I look at something and I say, I don't know. I'm not ashamed of that. I'm not going to sit here and be a dumb... I was about to be cursing. I'm not about to curse. I'm not going to sit here and be misleading and tell people that it's going to go to the moon because that's what you want to hear if I'm not sure about it. I'm not going to tell people that it's going to dump off the face of the earth if I'm not sure about it. What I can say is that these are pivotal moments where you have decisions made. You can be prepared for them. I've identified them already. I did it 2 years ago. I identified these pivotal moments. I'm not going to sit here and say it could go up, it could go down without any kind of bias at all. That is not what I'm saying. That was purely for a diagram. What I said was that I was wrong back here. Being wrong implies that I had an opinion, I had a perspective about what might happen right here based on the setup. An opinion that I can now go back and critique and learn from. That opinion was not, it could go up or it could go down. That opinion was, I thought it was very likely it was going to break to the upside. If I said I was wrong, that means that I gave an opinion. And I was wrong. To say it could go up or it could go down is like saying that I breathe air. I breathe air. I drink water. I live in a world, in a universe. Like, those are just statements of fact, okay? And when I say it could go up or it could go down, I need to be very sure that you understand what I'm saying because I'm not talking about little swings. I'm talking about a big macro moment. That could be very much the case. I have to say could be. Why in the world would someone get on here and say this is definitely going to happen and cause a bunch of lemmings to go off of a cliff? If you can't think for yourself and you're looking for someone to give you the answer, you're already in the wrong place. You're already in the wrong place. You should not be here. And I don't mean here in this channel. I mean here on YouTube. You should not be here for someone to give you the answer. That does not make any sense. We're talking about real money in a real stock market. You should not be going on to some faceless, nameless person. And I don't care if they have their face showing or not. You don't know who that person is. You have no idea what their positions really are. You have no idea what their motives are. That doesn't make any sense. That is the dumbest thing I've ever heard. It is okay, however, to come on to some place and learn and like be subject to like whatever it is the person's saying for a bit and try to see if you can glean something from it. I watch people and I learn from them. I love learning from other people. It's totally great. There's other places I go on YouTube for entertainment. It has nothing to do with learning. That isn't what I said, though. You're putting words into my mouth. That's what I'm trying to say. You're taking a conclusion that I made about a macro like setup, and you're saying that like, well, you're basically just saying that you're giving up after 2 hours. You came to a nothing burger. That's not what I'm saying. I said that my technical analysis, and it may end up being wrong. I said that I think it's going up to $20 by January. I've said that for the last couple of years that I thought February 2026, March 2026 is going to be the time where it's already at a peak or it's peaking. I've said the same thing for like 2 years. That has not changed. There are a number of ways to interpret that, but I can't imagine anyone, if we're sitting at $3 and I'm saying I think it's going to be at $20, thinking that I'm saying it's going to go down. But for me to also sit here and say that that's 100% predetermined would be absolutely ludicrous, pointless. I'm a little bit miffed. I'm not trying to be overly defensive here, but what I am miffed about is that the conclusion was not done yet. You're implying that I'm done, but I didn't say I was done, and I just said that diagram almost always comes back up. That's what I was saying. So I don't know who you like, what you're listening to, or where you're getting this idea that I said it can go up or it can go down. Yeah, it could go up or it could go down, but that's like saying I breathe air. Why is it wrong for me to state that as a fact, that it could go up or it could go down? There's nothing wrong with that. But I can say that while also saying that's a given, but this is my opinion. Like I apologize if I offended your sensibilities about the market, but every single day it's the same. It's the same. It doesn't matter what ticker you're looking at. It could go up or it could go down. You could look at TA any way you want to look at it. No matter what your TA is, your technical analysis is, the conclusion is always one of those two. It's binary or sideways, and you can call that like a middle ground. It's always a binary decision. Look, I could spend 2 hours and talk about every single indicator under the sun. And we could see which ones have the most credibility. I'm not worked up in the way that you think I'm worked up, but I am worked up. This is my problem, right? Is I get worked up, I get super spicy, and I get argumentative. Look, this particular setup has not finished. I said it when I was starting to draw it out. I was saying that this model of looking at it from a helicopter perspective gives you the question that started this, and it wasn't even really about that. The question that started this was about August and August and August. And the question was, is that a coincidence? And I said no. And the why I said no, I was giving a reason for that. I wasn't actually asked, will it go up or will it go down? Okay, so I just want to make that clear that the whole start of this conversation wasn't so that I could give a macro outlook. It was to demonstrate and explain why I didn't think it was a coincidence. So first and foremost, like I wasn't even answering the question, will it go up or will it go down? Sorry, I wasn't. If you thought that that's what I was talking about, I mean, I was getting there because I was trying to be like, well, this needs to have a point. So I was like, I want to get to the point. It needs to be concise enough to say like, here's why I think this, and then here's what I think the response is. But the question wasn't, will it go up or will it go down? That actually wasn't the question. The question that was asked was, why do we think that it's August to August? I was talking about the cyclical nature of those markers and why those markers are significant in that cycle. The next one in that cycle is January. It's not now, right? It's January. But if it's going to have a double upside moment, then the first one should happen by September, which falls in line with what the rest of the market has been sort of screaming about potentially running into August, which happened in COVID era. So I'm making this case that like there is a cyclical nature to this, and that these August deadlines, this has happened before. The last time we had a downward cycle like this, which was back here, it was a 2-year cycle. A 2-year cycle from August to August puts us at August 20th. Then the bigger cycle of coming back to this particular level, that is a little different. It's got 4 markers on it potentially if we do it again. That would go to demonstrating a gap fill. That doesn't actually end in August though. That ends in January. So if the goal was to just kind of take this from, again, bottom to top to bottom to top, and we use the chart shift, you would do this. This is a wave schematic like 101 for me. I'm like, yeah, that's exactly what I would do, right? And how I would get back to reset. What's this direction? It's up. The problem is that that's a chart shift. So there's been an issue where you have a previous chart, which isn't even on here right now. I'm going to put it on here. This is more or less realistically, I guess, what you would say is where that chart is. So the implied move is not from where we are now to here to $62. The implied move is from this previous bottom or this bottom here on the chart shift. And I'm not going to go into a 2-hour explanation about that. Don't worry. To there. That's the move that we really are wanting to get. That's the recycled move. That's the final move. This is the one that should define, in my opinion, it will define whether or not you go up in the end. And that's not something I can say yet. No confidence about that. None whatsoever. So when I look at this as a wave schematic, this is what I see. I see a lot of consistency, and I think that I'm right that it should come back up again. And I'm trying to make that case, but I'm also saying that like the reason the August to August makes sense is because the 2-year cycle was only a present right here, which was in the down cycle. And that was a perfect 2-year cycle back to reset. And then there was another 2-year cycle back to reset. So you'd have another 2-year cycle back to reset. It's not that complex. Like that's what I'm trying to get at here is that there's a fairly consistent cyclical nature. I kind of did that wrong. Should have been to, well, no, I didn't do it wrong. I just didn't put that in the right spot. It should be a little bit over. Sorry. I was like, why am I not measuring right? This cyclical nature right here from A to B, right? That is exactly like basically a 2-year window. Now it's 2 years plus this extra time that was spent building out the top there. So I don't know if you can see that and see where I'm going with this because it's a little bit tricky, but this is another 2-year window right here. And you can't really get much more simple than this in some ways. So the implication would be that there would be another 2-year window. Again, I'm oversimplifying it because it's not quite that. I know I'm making it like sound like it's more complex than that. It's not really that complex. This builds out to being basically like a January move. Okay, on my ticker, on my chart, I kind of got this in the wrong spot. This should be right here, January 13th, roughly, maybe even a little earlier than that. So the implication, what I'm implying is that this is, if it's going to reset and come back to this value, it would do it around January. However, in the previous example, you'll note that this was already up in this cross point at that time, and then the additional move happened in January. And you'll note that the move itself starts quite a bit before that marker. It's not like it gets up there at that time. It's possible, I guess, it could wait to the last possible second. We could be stuck down here till January. It's not impossible, but most of the time you're going to have a sequence that's built out for accumulation if you have a goal in mind, right? If the goal is to get up there by January and you have no desire to accumulate anywhere else on the chart, you might keep it flat. If the goal is to get up there by January, but you do want to accumulate somewhere else, okay, then it doesn't really make sense to not run it ahead of time. What I'm saying is that when you look at the entry point here and where this is building out, it really builds out August. In my opinion, it's August to August. The other thing at play is the nature of the angle. We're at a different time in the stock. It does not appear to need any more than, I don't think it needs more than $10. I mean, it can make a lower low technically. I think it would make more sense to come above and hit 12 just to kind of make the higher high before backing up. But it's entirely possible that this thing is not going to do what people think it's going to do because they introduced what I'm calling a chart shift, which is just a representation of an understanding that there's a value difference in terms of like price valuation. The simplest way is that this is the price. If we convert the price backwards in time, this is the better representation of what that price would be relative to the original time. That doesn't mean that like we should be at 650 right now. It's not what it means. It doesn't mean this is a fake price. But rather it means you guys are like, well, the valuation is exactly what's on the chart, Booksy. Yes, it is. It is exactly what it is on the chart. But in terms of like relating to the original values, this was like $1.90, right? Then it would have been more accurate to say that when we sold off in December, we sold off from like that bottom. Basically, that's what that was. Right? So then when we go back up and we build out above it again, it makes sense in both cases because you don't need to have the chart shift to understand that because you can just drag this back down to where it already is and you can say, well, I think that if it does jump up here, this is likely, and I've got it really simplified right now. I've got it kind of stopping short of coming down. But really, it should go all the way back down to this value and check it out. It's going to be like that January move. And then it'll build back out some strength above 640 because that's where the midpoint is over here. How do you know that? How do you know it's going to do that? Well, I don't know anything with 100% certainty, so I have to be careful, But we just did this diagram on the big picture. We can do it again on the small picture if you want and just kind of take a look at it. I can clear the chart and we can do it again. But this diagram is pretty significant for a number of reasons. It is. And you can see, like, when you look closely, this is not any different than we're talking about in the big picture. This is the sell-off. This is the drop-down. We need to get above that that 485 that we mentioned, I don't know, a long time ago. Back in summer 2024, we started talking about 485. That area is really where the rubber meets the road, so to speak, in this setup. And so when we look at this, all that's really required is a jump of this creek. We should be up there at 450. If you jump the creek right here that's coming down, and I'm suggesting that it's a 2-year cycle because it's been a 2-year cycle in the past, and it fits the bill. Like, I've got it right here. It may be hard to see. There's a red mark that goes 2 years out. And this one goes from September to September the way I have it, because I'm using like a number value of 318, which is a shifted value number that came up, and it's being used as an anchor for the bottom. I think that we need to dip below that in order and have that drop down and that pull up, that drawdown rather, and then that reaction in order to have the spring. And I've been saying that, in agreement with some others, that there's a strong chance for a spring, and I think it's very likely. It's a forecast. It may not hit, but that's all I can say. Like, I think it's more probable than not. It's not 50-50. It's like 60-40 or even 70-30. I think it's very likely we get a spring. AMC typically does that. If we didn't, I'd be a little bit surprised. For sure. But the overall picture here is like, yeah, with the chart shift, I think this is what we were looking for. When we do what we're doing now, we don't need to go past 20. And then when you take the big picture and you look at where that is in the grand scheme of things, yeah, this chart got really messy really fast. But in the grand scheme of things, like, this isn't that, it seems really complex. It's not that complicated, guys. It's super straightforward. I'm just using different methods to kind of bracket it in. You can think about it like a sculpture. You chip away at it like one slice at a time. If you look at it from that perspective, let's say it only goes to like $20. One of the things you could do that's pretty straightforward is, and I'm going to mess it up because I need to get that. I should probably get that line first. This would be one of the simplest ways to do this. So if you don't like all the other stuff, I get it. There's a lot of stuff here. But if you don't like that, one of the ways you could look at this is simply like, we're going back, we retested a creek here that we established a long time ago when we came down in 2020. This has happened before. This is like very similar to something else that happened right here, right? When this broke down, went back down and retested. Why is it not matching up with that same drop down? I've already said I think it's because of the shift. I don't think there's anything else to it. This motion into that bottom, this motion doesn't look the same because we don't have the shift value. If you put the shift value back on, that's not the right one. This valuation method actually works quite well. I think it's correct. It's higher up, but it's a 226% interval. So it'd be like saying here to here versus here to here. And it does change your angles quite a bit. I'm not going to get into like stronger detail about that, okay? My point is that that particular valuation, if you just look at it from that point of view, if you didn't know anything else, and you had this, and then you also had this one in the chart, which is like a middle right here, which goes back to, again, where this crossed up, where this crossed down happened. You would recognize that there's a 2-year cycle from August to August. There's also I'm going to kind of fudge it here. There's also this other interval that we were just mentioning. Make sure I get that right, because I think I got it wrong the first time I drew it out. And then one more. It's kind of the same. I think I already got it in like the same spot, but yeah, I think I already got it. This one's kind of shared, but it's basically right there. Maybe this is even earlier. I don't know. It's possible. This looks like October when you do it that way. When you go to actually actual peak instead of just keeping it even, it actually looks like October. I don't know. That's tough to say. It doesn't really work on this side though. There's like an extra little gap here. So it's not really possible to, that's what I was trying to say earlier. It's not really possible to make it even because the chart is like slightly off. There's like this weird little segment in the middle. I'm not really sure what to make of that. I think what it is it's that shifting value occurring here. Like that whole segment is kind of all one area in the center. I can't really determine which one is correct. It doesn't make a huge difference because in the end, you know, it's going to be pretty close. And then also the time of how long it takes to get up there significantly should be about the same. And I'm suggesting that that happens, again, in the right time. So the measurements here are accurate. If you take this out from August, so let's do the 2-year cycle, right? I'm going to make it a lot simpler, okay? I promise. If I take the 2-year cycle and I go from August, I have this on September, but let's say it does initiate right there on August 25th, and then it goes to August 25th. That's perfect 2 years. August 25th to August 25th, and then I do the same measurement, and I'm doing a little bit of guesswork here because I'm also saying that I'm not really including that last little bit. I should probably preface that I'm using that 25th as a presumed bottom, but realistically it should be when it crosses this creek. If the 2-year cycle is being measured in that way, or like when it's back to the reset point, which that's not really likely going to happen unless you think it's going to run up before then. I'm not convinced. I've also talked about how I think what's happening is that the 2-year is working on this trend right here, not the Unity's crossing 29. This trend right here, not a flat trend like this one is, because that valuation is like a shift valuation in the build out, and I don't want to get too deep into that, but it's like sagging essentially. So I'm looking at it and I'm like, as long as this doesn't up thrust first and it hits a spring, it's more similar in my opinion to this than it is to this. They're different. So this is like an upward cycle, this is like a downward cycle, and then this is a downward cycle here. So I'm arguing that this should be an upward cycle because we haven't retested it in an upward cycle, but the shift. So that's a problem. So we have an upward cycle now coming into the end of this. And what I'm saying is that I think when you use that in consideration with everything else we're saying, that, you know, there's a lot, by the way. I've kind of done it like a dozen different ways. Presumably, like, it would already have gone if the 2-year cycle was 100% accurate, because presumably then you should have already like taken off. Weirdly, when you use the August 22nd, I think I did this before. When you use the August 22nd, you basically get to that April motion, and that does concern me. Like, why is it not taking off? Maybe it will. You know, maybe we're not wrong. It does hit a spring early, and then it goes like all the way up, and it's already up there. You know, I don't know. But the other thing about this is if we're right about it, then it really doesn't have to leave until the 22nd either. That's another way to put it, because then you would say, well, realistically, it is already where it's supposed to be, because this is the place it's supposed to be. It's supposed to be on this marker right here, not way up high at 12. And it is. It's already there. So by August 22nd, it should be right here at like 361 or whatever it is. Then it's ready to go. And now you're in a potential reversal period, right? So if I use that and then I use kind of some basic TA and just suggest, all right, well, it's meant to come back up like it did here, but it's going to do it not in a horizontal way, but a flat way. Then presumably the first move doesn't need to go that high. If you look at the parallels here, we have one that is obviously right above us where that gap is right here. That's pretty nasty. That one would stop at 5. But as long as it goes above that, you should be coming up to at least this one, which is 730. That's the one of the targets that I called out on streams recently, and then the other one's at 12. So I've been saying that, like, I think what's in view is this area right here. There's a pocket of liquidity from here to here that hasn't been traded as much. This has been traded a long time. And so what makes the most sense to me is that this is indeed a 2-year cycle, but the 2-year cycle is really not trying to be at this value within 2 years, but at this value within 2 years, which I've talked about previously. And then after that's done, what's left is a breakout. And when you look at the combination of this TA, okay, in combination with what we were just talking about on the big picture, which is that this is like a macro wave and it hasn't actually come back up again. That same thing applies right here. This is the same exact, almost same exact setup. There's some minor differences in terms like where this stuff happens. I get that. But even that angle is used quite a bit in this chart. It's used a lot in this chart. I was talking about how like it was basically the same as the angle here and so on and so forth. When you take that into consideration and you look at where these setups are, you can also take this and apply it in a micro way. I don't know if I'd do it too like extensively, but I would take it and apply it down here as well in consideration of like where this might be going right in the future. Probably right at that gap level. And again, that confirms like a low value, but we know that it really doesn't represent where this went for a number of reasons in that particular way. What really represented it was this top one. This tells you where it comes back to later. It doesn't tell you where it went to in the beginning. And where it went to in the beginning was here. I've been thinking about that for a long time because this was supposedly some random act of, bunch of dumb, money, but that's the way it was described. Dumb money did it. And I get that the buy button was removed, but it was a technical level for sure. Like it was already in place. So I find that to be quite interesting and just something to note, like as you go forward, I suppose. With the idea of like this coming back up, we were saying like on the macro, shouldn't this come back up to here? So I'm just drawing a parallel example, right? We were saying, well, shouldn't it come back up and retest this area and do so roughly on this wave, like kind of like this one did. So you get this rotational movement. Again, it's not that low, but shouldn't that be the case? I've made an argument at times that I think, yes, that is true because you're back testing this value that you didn't actually back test. We didn't come high enough to hit it, and we definitely didn't hit the gap fill right here on the drop ledge. The drop ledge is really significant. It's almost always where you come back to, and we didn't do it. This push up right here, even on the shift, doesn't come up higher than $29, which is too low. Like it only came up to like right there. So I've been saying that like I think that's very likely where it's going to go. The problem is that there's a shift. So the shift changes things, and that just whatever. It is what it is. I keep talking about the same things. I don't want to talk about the shift like it's like I don't have to explain it every single time because it's a complicated. It's not even that complicated. It's just that the implications are complex. To get the shift, it's pretty easy, but to imply like why it matters is more complicated than I want to get into right now. So I don't want to do that. But sell off, buy up, sell off, buy, or sell off, buy up. This buy up presumably, right? It should be heading back towards that value, but then there's been a shift. That shift means that instead of $64 being the center mark, which is really where this, again, we were talking about why is this coming back to the same value? Instead of $64, that shift, if you use the 226.36, is 1961. That's the number. So I was talking about earlier, like that shift is very important because it represents like where the same value now resides. And it's not up here. The middle is now 64, which is actually low. Like it's lower, excuse me, the middle used to be 64 on this move. That was the center mark. That's what would have made the most sense to me. Like every other diagram I look at like this, it should be coming back towards that middle mark, which is now $64 on the chart right here. Sorry. It makes sense to me. It does. But in the chart shift, when you do the math, it's 1961. And what's crazy about that number is if you go and look at where those gap values are, it's like right there at the top of the gap, which again, I got by using that chart shift value, which shows that it's actually like a shifted value away from that as well. It represents the same exact gap that's represented here. So it's really actually quite fascinating how those numbers came together. I didn't use that middle value, by the way, when I came up with this equation of 2.2636. I used something else and I went backwards through like valuation changes. But taking that number and multiplying it by 226 gives you 1961, which is again right here. And that 1961 value is the top of the gap, which when you do the shift from that point up, you're like, well, shouldn't it be 64? Yeah, but like that's the funny thing about it is because the way that percentages work, taking that and shifting the whole chart by that valuation gives you that same gap that was created here, which is actually 45. And you're like, that doesn't make any sense. I know, it's weird. I'd have to go through and I'm not going to do that right now. But I did do the math. I checked it out. I was like, this is really strange. That's the way it is very bizarre to me. But yeah, so this is essentially the same as that gap value on the shift. So why am I talking about all this? Because on the big picture, this is what the expectation would be if it's going to be bullish, and I think it should be. On the small picture, it's the same thing. You have a gap ledge that's quite high. It's way up here at $5. Why is it so high? You know, I've been thinking about that for a long time. I don't really have the best answer. I can say this, though. There's a second one, and it kind of bothers me that there's two, but there's a second one right here at like 4, and we did come back and hit that, right? So we did back up and hit that, but we never went back up to that drop ledge at 5. And I think, again, part of that's just like the consolidation here on this like kind of bigger wedge right there. This was like a big hook value, right? It's like 485, 490. It rose up to 5 slowly over time. It was pretty close to 5. It's that value right there. It dropped off there. It just never came back. And that's more similar to like this drop-off value right here, which, by the way, we did come back to, but we came back to it right there with the buy button removal. And this drop value, which we still haven't touched. Like we haven't come back there yet, right? So it's like there's certainly elements of this that I'm like, I don't really get it. You know, I don't know why it hits certain levels when it does. I'm still working through that in my brain, I suppose. But I know that that one's not been hit. Like that's kind of just been left open. But it does eventually get hit. Like it's very likely that that does get hit at some point in the future because it's not likely going to be left forever. And then when I look at this bigger schematic, I'm like, all right, well, this is typically what happens is that you come into a bottom and you create the first bottom, you jump the creek, and then you create the second bottom, and then you rise to the top. You don't usually do it in one motion. That's pretty unusual to come all the way back up in one motion. Usually there's an M cross in here somewhere. I think, if I'm not mistaken, that what we've done is create like a duplicate down here of the same thing right here where you've got that cross down, and now we're doing it again. It's kind of frustrating, I know. You're like, this is really annoying, Booksy, 'cause it just keeps going. I know, it does. But it's true, though, that to some degree, because there's an element of consistency in looking at that and saying, well, it's doing the same thing repeatedly, but mainly because it hasn't actually jumped the first creek yet. Like, it hasn't jumped the bigger creek, the macro creek. This hasn't gone into like its bullish phase. It's still in that downward motion, right? But that repeated function right there would also demand the same ideas, right? And that idea would be that at some point you're going to come back up and reach that interval, just like at some point you came up to reach this interval. And the only real question we have to ask is, well, where are those intervals at? Like, how long does it take to get there? So take that away again. I'm going to take that back now. That's like the wave schematic in principle, looking at right. I have to keep this one because this one is the shift. So it can't like get rid of that. So the other question I would ask is like, where does this fall in the midst of everything? And this is one of the weirdest things about it that I'm not 1,000% sure about just yet. And I've talked about this a couple different times. I think that this value right here, weirdly enough, even though I know this is below, and you might say, well, shouldn't it just be like 4? Like, why not just say it's like 445? Well, yeah, there is a 485. Don't get me wrong. That's certainly on there. That like 450 to 45 area is definitely a contender. But the other contender is actually up here at like 613. And it's going to sound really strange, but they both matter. They could be like the middle level. I know it's weird because you're like, that doesn't look like the middle. I know, but it has to do with the way this sets up on the way down and like where certain markers are. And 613 and down up to about 640 is extremely important. Do I think the rate cut in September will bring it up? Yeah, possibly. That could be it. Yeah, I don't really know how to kind of best like demonstrate this. Trying to like be judicious about it, but there's not really an easy answer for it. Like, I'm trying not to speak in a way that is like hyperbolic so that it doesn't sound like I'm over exaggerating something. Though there is a very strong significance to these angles. I don't want to like be hyperbolic about it. But I think what really this is, and I know this is going to sound weird, is this is like a trajectory channel. And I think when I talked about that $6 area, what strikes me as odd about it is that when I did a lot of the original measurements for this cycle down and stuff like that, I found that 613 to 640 area, there's a lot going on there. I found that was a very strong contender for what I thought was, I later call it like the middle. But when you say the middle, it's a little confusing. But it has to do with the middle from here up to the top of the gap and like why that would matter. And ultimately, like what that translates to in the chart shift. So when you shift the chart, like what that actually represents. And that was where I kind of ran into some road bumps with it because we don't have... we're doing it like inductively, like we're not able to know the answer before we start, so we have to like Well, to some degree. So we have to kind of go backwards through it. But it had to do with this because it was like the distance from the bottom of the chart shift to where that actually dropped from the previous range. So that's the 50% mark. It's at that little lip. So the actual drop down from the previous top, like which would be the range top, really goes to the gap, bottom of the gap, not the top of the gap. And it doesn't go all the way up to the top of the trend, which is strange to think about, but it has to do with like, really that's where the range changed. So the range changed, and then there's a midpoint that's kind of, it looks like it's in the middle of nowhere. It doesn't really make a lot of sense to me at first. When I first found it, I thought that was a very odd number. And I thought, well, I don't really get why, like it was like 613 or something. I was like, I don't really get why that would be important. It didn't seem very important until we came back up and we got really close to it in that extended hours. I was like, well, those numbers appeared again later in like extended trading hours. And also, in addition to that, when you look at the downward motion that ultimately was built out on this chart, there's a lot of interaction with that center area here. And it just, again, it depends on how you want to chart it, because you can chart different angles here. But there's a lot of pivoting, I should say, around that middle right here. So I have strong reasons to believe that that is very important. And as a as a drop ledge, okay, I'll just say that, because I think it's very significant. More significant than we probably realize. And that's part of the reason why I'm inclined to think that we do go above this area. But then this would then represent to me something different, where this normally I would be like, dude, it should be way up here. Like this is where it clearly is, right here, right? So why are you not using this guy as the bottom? Why are you using this weird thing? I think all of this is a structure. I'm trying to think of all of this as like a singular structure, because it is. This is a hook right here on this bottom, and this is a hook on that bottom. And then it finally dumps, and there's this really long markdown type period. And when you divide it into halves, you can see like that's really where the halfway mark is on this singular structure. So I think that this is actually where that quote-unquote LSPY drop-in was. And that means that it's similar, but maybe not exactly the same as the area right here in 2020. Again, grain of salt, this area and this area would be potential guesses, is that being like the correlation to the $6 area. If you were using this as an LS, like as a bear flag, right, you would say that it's kind of like this guy, where this is a hook, and then this is like a hook on the hook, and then this is like the final one that drops it out of that region. That would be like the pivotal moment, right? And that would imply that while this could go up above it, it would probably not do anything until it breaks above that, which is why I've been using that $6 area. You've seen me do this, where like this might pop up pretty far. This could go to like 10 to 12, maybe not that high, but it could go pretty high, right? But it wouldn't likely stay there, and it would probably come back down and trade off of, it would hit maybe as low as 4 something, and then it would trade up and away from that until it gets to 6. And that's really where the rubber meets the road, so to speak. That's where you would expect it to kind of break out. And it might even be lower than that. Like, I don't know for sure, which is why I've hesitated to say it goes way beyond even like $8. I'm like, I don't know. It could stop pretty shallow here. This works because if you look at the big picture, yeah, like I'm making a lot of big statements with kind of some guesswork in it. But if you look at like assumptions, I should say, not guesswork necessarily, because I'm using information. I'm not just guessing out of thin air. It doesn't look quite right at first. It looks too weak. But then if you consider the fact that that's where the creek is, it actually makes a lot of sense, because the same thing happened here. This is the same moving average. This is the daily moving average. This pocket, it sits right above and it correlates to where it should correlate to, right? It breaks out at that level. That's the same idea as like this, except this is now accumulating like higher up or lower, excuse me, not way high above this. but kind of right around 6. So it's wrapping around 6 here instead of... Anyways, so I took this into consideration. I was like, that's where that level probably makes the most sense. It's on top of this. And it also falls into this bracket here, which is more consistent with what we see on the macro, because in the macro setup, yeah, these parallels are important. This ends up being kind of like a middle point for the whole move. And you can see that the extension below and then the extension above are extremely similar. Like that's the extension above, that's the extension below. We've talked about that before. Like the spring often ends up being like an extension, not actually like to get you there. Sometimes it's like an extension above the top. It's almost like an inversion, right? And then this ends up being like the midpoint right where that 50% marker is, which is directly in the middle here. So in theory, if you knew where all of these kind of similar markings were in the walk down, you should be able to figure out like how far it ultimately goes in the end, which is why I've been using a lot of these valuations in the 50/50s, because if you evaluate it from like where it is now and you go to like 6 something, you can see it only gets to like 1310. But that's like LSP, right? Or excuse me, that's like a last point of support, LPS. If you use like a lower number, like a 226, which is like the one I've been using a lot here and there, and you drag it up, you can see this goes to like 1635. Well, what if the valuation is really lower? Well, then it's really bad, right? This only gets to like $9. You know, like it could be that low in theory if that's really all that we're going for. You know, I don't think it is. I think there's more to it than that. But you take that into consideration that this is now formed like a micro version of itself, even within itself. It hasn't jumped the creek yet. Once it does that, if it builds out here, depending on how low it goes, right? If we see this thing drop to $2, suddenly it's changing and it starts looking a lot more like what we were expecting, which is to come up to 1961. If 1961 is roughly where we want to be, when do we get there? Well, like I said, probably in February, and that's where this very top marker is, right there, going into February and March 2026. It's almost like they already knew that they wanted to get there, and they were deriving triangulations, which is very likely. You know, worst case scenario is we are right, but we're way, way, way early, in which case you don't get there till late 2026, which would really stink. I'd be honest, I mean, it would stink, but it is what it is, you know. I don't know yet. But these are all the same as these markings that we saw previously, you know. So the question mark that I have in my brain isn't so much... Like, I don't need to answer every single question, but I'm trying to figure out where that is. That middle is where the anchor is. When you do the 50/50 from something like $1.90, and some people said like $1.84, it starts getting a lot closer to the 1961 top, you know? And that's where I'm at, because I'm like, look, I know that springs are not fun, but in reality, if it's already implied that there could be a spring, I think that you want to see, and if I'm correct, and this is actually the middle at like $6 roughly, then it should be right, you know, in that pocket. Like it should make sense up and down. It can't be just one or the other. So this is roughly where it is. I'm not kind of estimating, but that's like 180, and we've heard that quite a bit, haven't we? So it's not just timing, it's also money. Like the spacing between these things. Well, we're coming into earnings. It looks like it's going to go up. Maybe. You know, it just made some weaknesses. I think that's probably what we wanted to see, because you don't necessarily need it to run into earnings, because earnings gives it plenty of time. And I would be almost happier if we saw like a little pop and then a big drop into earnings, right? We were talking about that. Like a little pop here with a bigger drop into earnings. It didn't have to go that low, but a little drop into earnings wouldn't be bad. There's other trajectories here at play. I don't want to go into every last one of them, but this one coming down from the top, it's really more of like a middle trajectory here. This one seems really relevant to me. It's the same as the parallels that we have on the chart anyways. And those are the ones that I was using to determine, like, again, where the main creeks are. And this guy, I feel, is pretty significant. And this could be potentially the bottom at like 205 or 209. You know, it changes things a little bit, but it's definitely a contender. I may bring this up a little higher. Maybe this is like the higher point here at 640, like I was saying. So I don't know which is which. Like, I don't know which one to use. 640, minor differences, very, 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 very insignificant in some ways. 'Cause that's the difference. It's like 40 cents in the end, and it still gets you to 1961. Then the bigger question is like, well, does that satisfy the valuation retest? And the answer, I think, is yes. If they're really trying to go back to where this all started, which is the 64 value, you may think that it doesn't make sense because, again, it's like, well, that doesn't make any sense, Booksy. 64 is 64, but you have to remember something. This 64 was not 64. What? This 64 was 64 less ape, right? There was another part of the valuation here, and it was lower. It was an averaging. And that's where I come to the whole point of like the chart shift, was that when I did the chart shift, it ended at like 239, which is like, it ended literally at like $2.40, which is where we ended up going to. I'm not joking about that, by the way. I know I've said it before. I showed you guys the Excel spreadsheet, but that chart shift was, that combo chart that we did was just a calculation of like 9-to-5 ratio. It was more complex because we used the actual amount of shares and we did a division and then brought it together. So we did the ratioed combination to see what the actual share value was, what it would convert to if you combine them all. Because there was more ape and it was priced lower, and then there was less AMC that was priced slightly higher, but you had to do the correct calculation. They weren't 1-to-1, right? So you couldn't just add them together and divide by 2. It wasn't that simple. You had to add them together and divide by, like, I don't even know what now. It was like you had to add 5 parts of one, 9 parts of another, and then divide by 14 parts to get the thing. That's the correct calculation. It was a weighted average. When we did the weighted average, it didn't actually show you hitting here. This wasn't the drop ledge when you did the weighted average. The drop ledge was some value of, really bizarrely, was some value at like a little higher than $3 or something. I actually think it was probably very similar to this 316 that we keep wrapping around. So again, there's complications in that, but this is kind of like an aha moment for me, because I'm like, okay, well, this liquidity then that was basically sitting right underneath here was already traded, because this is the region that was essentially the combination chart. And it was at the time, again, you might say, well, if it's $3, then we are exactly where we need to be, right? We're sitting in the same area. Well, I think we might be trading, again, just underneath that valuation. But if you actually look at what that means, it means that during this time period, we were pretty much on average, if you had the correct amount, if you had like enough to equal parts, I guess you could say, and that would have to include 9 of one, 5 of the other, you would have traded this zone. Like ape they were overlapping. It wasn't like, I'm making it look like they're completely separate, but they were overlapping. They would have been like this, basically. And so ape was priced lower. So they were buying ape at like this valuation down here. They were buying AMC, probably shorting AMC at this valuation right here, right? And buying here. It's a really genius schematic, because then when they did convert and the valuations converted, they had plenty of ammunition to take it down, and they weren't losing money on ape, weirdly enough. Because once it shifted, then these values all shift with it. And we did that one day and looked at it, and we were like, that's pretty bonkers. So it was a really smart way to trade it. And at the time, that's not the way I traded it. People traded it literally backwards. They sold ape and bought AMC, which was actually backwards. But anyways, so the point is like this ends up being the actual range, so to speak, of where we were trading before the whole Judge Zern decision, because it wasn't just a reverse split, it was also ape. So the valuations here are not what they seem exactly. So what that means is that the drop ledge, I think part of the reason why they used the values that they used for the shifts is because the drop ledge, it converted really neatly from here to here, which we do find that this is essentially like that valuation shift, like this region right here from the creation of, and there's a lot of bizarre setups, by the way. I've got it as a negative percentage right now. But one other thing that was really bizarre was like if you go to the ape and then you go to the end, that was roughly the same as well. Like where ape was created and then where this ended, that was essentially the shifted value. And then they shifted that value again here. And see that value? It's really bizarre. And you're like, well, that increment could mean anything. No, it doesn't. It means a lot of things, but it's not just random. That increment was actually, I think, paramount to this whole shebang. And when it when it goes into that next cycle, it's like a similar move, but ultimately like this represents then that drop ledge. And so I'm taking you through this like little story because there's a lot of TA and a lot of like explanations and junk. Because when you think about it that way, then it makes a lot more sense. So why are we going back to this area and not all the way back up? Or why are we not doing a higher push here? Like, that's the reason that I changed a lot of the technicals really back around December of last year, was because I was like, I'm missing this element of liquidity that's super important. And when I went and did it, I was like, confused by their numbers. They said something about a 10 something, 1060, which is like up here. And I was like, where the crap did they get that number from? And it was like the chart shift value. And I was like, this doesn't make any sense. What the heck? And I still don't know why they use that number, but it ended up helping me to do the reverse analysis and find it. So this area, that's the long story short of that particular thing. So this area right here, I think, represents essentially what we're trying to do. Now, it just so happens that, of course, in modern times, without all this chart shift nonsense, really in a lot of ways, this represents just the previous bottom, too. It's just a test on the previous bottom. If this ran up and hit 1037, right, and then dropped back down and tapped 410 or 420, you'd probably just say it's back testing the floor, and that's fine. There's nothing wrong with that. There really isn't. Like that's an okay way to look at it, because it's not going to ever look wrong. The way this chart shift worked out, it's just not going to look wrong. But then the question of like, where does the second move go? That changes things quite a bit. And when I look at it from that perspective, it's like, you really don't have to go very far at all to sort of accomplish what you need to accomplish in terms of these like shifted valuations. So I'm looking back and I'm like, yeah, I could totally see this particular guy right here correlating to this dude. I should make it green. I think it's the same. And this is, again, micro to macro kind of stuff, but it's the same, generally speaking. Well, maybe we already hit it then. Maybe. That would really stink. But we have, right? Like, because we did already come up here and hit it and go down. Like, we hit this and came down. But it's important to know, like, again, these are like layer cakes. We're talking about multiple layers here. And no, you're gonna get a little lost. That makes it sound really confusing. Because you're like, well, we already hit it. What? We already did the big squeeze. That was it. And then we're coming back down and crapping out and all this stuff. Yeah, but at the same time, if that were the case, then this would basically be over and you'd be doing it again, which means you'd squeeze again. And then we're resetting back to this previous way of looking at it, which is a bigger bottom, which makes sense. It should micro iterate into a bottom. Like it should shrink and shrink and shrink and shrink until you get to that bottom. And that's what this one does. And I've talked about that before, until you get into that bottom and then it finishes. You know, the bigger iteration is a lot harder to see, but it's there. And just like this one, it's really obvious. It looks really similar. This one is a little less obvious, but it's there. It is. This is just much more long-winded, and it kind of accelerated at the end. It is. It's there. Keep saying that, Booksy. So take this into consideration, okay? That we have in front of us some pretty succinct measurements that make decent sense. They measure out correctly. They give you a spring locally. You know, it doesn't have to be necessarily lower than 239, but it looks like it's still aiming for it. And the reason I say that is because I think on the big picture, if this is the phase B, it doesn't really need to come much below 246. I still think that's possible. I've talked about 226 because that actually would translate to $1 in the past life kind of conversion, although that's a little strange. It makes more sense to me going to $1 for other reasons too. Cause the S curve on the combo chart actually had an S curve to $1. If you read it very literally, it was like a perfect 50-50 down to $1. But that wouldn't be the way it would be shown now. It wouldn't actually be $1. That's complex. I don't want to get into that. It'd be the shift value, right, times whatever the value is here, equaling $1, which again, 226 would do that. So dividing it, not not actually doing the other way. I made that mistake. Sorry. The other thing we would look at again is like taking this into consideration is just on the big picture. Like while this is kind of confusing, you know, I think it is kind of confusing. The other thing is like remembering like the bigger wave. So this is like a micro version of the bigger picture. And we're just saying, hey, on a micro scale, this makes a lot of sense building out. That same thing happening on a macro scale would be very intimidating. Like again, looking at that saying, well, I think it's going to go all the way up to here and then do this and then come all the way back up and presumably going up to this green value. That's like crazy, right? This is where people got stuff like $2,500, you know, per share. This is where they kind of get that kind of stuff. But I don't think that's likely going to happen because that's a huge number. Because like, that's never going to happen, Booksy. I don't think it's likely going to happen. But if this were to happen, it wouldn't look like, probably wouldn't look like this. It probably would not. Remember the diagram I drew had multiple crosses, and that's very significant. The time it takes to do that would be significant. If you go to look at the wave on the big picture, like the biggest possible picture, that would be like 2027. And that's just getting above this marker here. That's just to get to here. So like even getting to that point would it be at least 2027 in my opinion. And that's assuming that it actually went there, right? So this idea of like it just does the exact same thing because we drew it out this way, that's not really the best way to look at it. A better way to look at it would be that right now, though this seems very probable because it hasn't made the backup yet, once it does that, then there's really nothing else to do except come back and get whatever shares you need to get. You don't have that much time from here to 2027, But most of that could be spent in downside. And if you look at this as a repetition of fractals again, and you look at the big picture and how this broke out, if this is weak, or we perceive it as weak, like it's holding itself back, it's really because it's building out a macro range down bottom, which does add a lot more, I think, credibility to this. Because if it sticks itself in this channel and then it does the same thing it did here, but it does it on a bigger scale, then the expectation should be roughly the same. Like we would expect this to basically go, and it's not going to look right because again, the shift value pushes this stuff all over. It would have been like 50-50. It would have made more sense that way. As a wave down, I think it would have made sense at the halfway point, but instead it's like kind of wonky. Maybe it's somewhere around here. I don't know. We could still use that. But you would basically use this as a guidepost for like a longer term move. Like where this move and this move are the same. Not this is a micro version of this and it's about to dump off the face of the earth. Someone might argue that, but I would just say that if it does that, it's going to be so small it's going to look like a spring because that's what it is. Like the compression here will be really tight and it'll be just like a terminal shakeout. So this whole thing could happen again down bottom, but it'll be tiny, right? So yeah, maybe it's happening right now, but it's going to be small. But rather looking at it like, no, as a wave, this is just a bottom and this is just a bottom. And not like iterations, right? Bottom to bottom kind of thing. What happened was that when this went up, and it does a pretty good job of keeping that diamond structure intact. It's the same diamond structure that we see here presently. Like that walk down, this walk down, the build back out, so on and so forth. There's some weirdness in here, but if that goes up, then the expectation would be that at some point in the future, probably around January 2027, which is like a year later, this would be back down to here to like $7. And then it would do it again. It would drop again. But this time we can use what we know from like a macros perspective and what happened with the shift chart to make a better estimation of what might actually occur then. Because we wouldn't have likely have a reverse split or anything in our hands. And what we find is that this bottom valuation is like right around the midpoint of the whole structure. And that's probably a better way to look at it, so that this ends up being like a midpoint of the next structure. So yeah, it may do it again, but in this case it would be pretty small, right? So you'd get this kind of midpoint here, and then it would break out, and then more of the same, right? And then you would go. And this is the true spring. What's crazy about this, that some people who are really big Wyckoff aficionados will know, is that even though this is really crappy looking, its potential for as like a phase B with a phase B spring is pretty noteworthy. And the idea of this as a bottom with then a potential spring also may seem a little bit silly, because you're like, well, isn't this already a spring? If this is like a B bottom or whatever, and strength test didn't go that far or whatever. Yeah, but then we have to establish this. And I think there's reason to believe that wherever this low is may also play a part in where this goes in the future. It's very possible. I'm not saying I can't say it's not possible. It's very possible that in the future, this could end up being at like $1, you know? And it may be that right now it doesn't hit $1.90, it hits like $2.36, but later it does hit, you know, $1.50 in the dollar or whatever, like down over here in the future. But this would imply then that, again, at this particular point in time, yeah, you could keep doing that indefinitely, I guess, if you wanted to keep doing it indefinitely. But the next motion on the next build out here, see how these schematics like lead into each other? We've just did this one, but we did it on a shift. The next one doesn't need to be shifted. Nothing's changed unless they've done another reverse split. This one goes up, and now it's above the creek. So this ends up lasting like a really long time, and it looks like horrible and boring, but mostly because this is just a series of slow moving creek jumps. And that's all it really boils down to. You can take it and use this as like a bottom. So there's the one right here, and then it comes back down. Just like we did it here. See how we jumped these, and then we came back down to this creek? We jumped these, and we come back down to this creek. If that's too much, you can just take away the that extension. Look at it that way. There. Do you see that? That's the iterative jump. So this functionally creates, this is where I'm like, I'm basically going to be perceived as like a psycho because I don't know, or something. I don't know what my brain does, and I just don't. I wish I could tell you, because sometimes I'm like, maybe I'm just doing it from a very like math, science oriented kind of perspective. But this is what gets me when I see stuff like this, is that when I go back and I look at this and I do the diagram as I think I should do it, I'm like, you know what? That's just the same thing. But I just did it by using iterations, which blows my mind. Like, all I did was take the same iteration and play it out again, but smaller. Well, that's really annoying, Booksy, because when's it ever going to stop? Till it changes character. When's that change of character happen? When it finally jumps the big creek, which it established back in the major run-up. This is the biggest iteration. What if it doesn't jump the creek there? What if it goes really fast and then it comes up again? I don't know, but eventually it's going to jump it. It could shrink one more time. I don't know. This is a holding pattern, right? And I think what's in view is probably the 2029 due date for those. They should have already restructured, but whatever. I think this is what's in view, basically, is like the 2029. That's the same wave right there. So that's the next break period. So this is going to be a crappy 2-year cycle, I think. This is part of the reason why I was talking about yesterday. I think I'm done with traditional streaming for AMC and GME after this big move out, because I don't think the next couple of years is going to be very nice. I think we're probably going to have something happen in 2027. I mean, who knows? Maybe it'll change. Maybe in my opinion it'll change. But for now, I'm like, this really looks like it's not going to go anywhere until 2029. I think at that point, this may revisit the original high values, like over here. This is what I think is very likely. And again, like looking at it from the helicopter standpoint, to me, it's just an M cross. It's just a wave cross. Even this final drop down right here, like look at where they put that, you know? Like look at where that is. That's like where the final like ledge is right here, and that's where the August high is. Even that creek is kind of built around this like $4 level. And we just like leap over it and stay above it. We're probably going to go up again, but we're not going to come back to that. That one's just like a temporary one. But even that one like implies that you're going to do a jump right here. It just doesn't imply that you're going to go significantly farther. And I think originally I'd been thinking it was going to come all the way up. And then when I did the shift, I was like, no, they're probably going to use this time to build out the bottom right here. You want to see something really freaky? Go to like the 1 hour. I think it'll go in August, September. I do. If I'm wrong, I'm wrong. I can't do anything about it. I'll just be wrong. And it'll just be on my track record forever, I guess. But that move in August, September, there's just no better timing for it. If I'm wrong, it's going to be January, and then that's it. Like, I don't have anything else. Like the February, March area, I guess you could argue is possible, but I'm like, that's the same as the January one. It wouldn't be any different to me. I see them as like the same. Anyways, if you want to see something really freaky, that'll really freak you out. Guys are like, what? Go to the original top here. This right here is a macro setup. That potentially, this is a setup that is potentially also played out on the macro, like the big picture. And it's a very disconcerting feeling when you see it, because you're like, oh, when you take this guy and you go like forward and you just do this first one and then you bring it out, take it and like stretch it out a bit. This is why I believe that wave analytics, not really fractals per se. Fractals are a bit hard because people imply all kinds of things with it. It's really about where the wave is going. But if you want to see something really freaky, go look at the this build out here. It's the pattern, it's the behavior of the stock, right? How it traverses during a sell down. Take that original bars pattern from the very, very tip top and apply it to like the next layer. And then you can do it again if you really want to, although I wouldn't recommend it. It could probably hurt your brain a little bit. You can take that same concept and you can actually look at it on the macro as well. So this pattern right here, it's not going to work as well because it's going to be a little off. But you can apply the same concept right there if you get it in the right spot. As an expanding iterative motion. The reason why I wouldn't recommend that is because it's relative to itself, like the way it's proportioned. But the cat ear is there. It's all the same. It does the same thing every time. Big picture, small picture, whatever. The other implication of that would be some gigantic move is about to happen up to this particular ledge right here, which we already know to some degree that sort of happened, And I've talked about how like this, depending on how you interpret it, this could be that first big move that we made, like the March move here. But I also think that that's a bit difficult to judge because this is a distribution, so ultimately it comes down and makes a new low and it doesn't have a spring and it comes back up and dies. So it would be like us going up to like 7 and not going any further or something like that. And that's not really the best way to look at this, in my opinion, because it doesn't have that weakness embedded into it. In fact, there was a lot of strength in this first bottom because it hits a low and then it never comes back to it. And though this does come down again, it is yet to make a new low. It's like setting up above the floor. Whereas this makes a low like right off the bat and then reacts. And then it comes back down and traverses that low. It dips really low. It's a big U shape. Very different than this. So I was critiqued a little earlier gently, and I kind of reacted to it. I did react to it. I was saying like you have in theory like the same pattern, but the idea of it being identical is kind of dumb if you're not reading the chart. I don't think they're identical. That's not the same. This has no major slink all the way down to a new low. It doesn't come down here. There's no second drop that goes lower. That's weakness. And then it didn't pop and then come all the way down, and it's not like that. This pops and it stays pretty high, and then when it comes down, it doesn't even achieve downside quickly at all. It's really slow and boring. It's much more in line with an accumulation, in my opinion, and there's still no low, right? Very different than like this setup right here. So I think the end result is not going to be as likely to be as probable to be a distribution. But if you want to freak yourself out, go play with those. It is really weird. You can go play with those fractals up close and see them. This one, though, largely has been a big part of, there's two areas on the chart that I've used quite a bit. One is just in studying wave pattern, not necessarily the fractal itself, but just in studying wave pattern. One is right here, which is where I got the master fractal idea from. But that was really more of me trying to understand the way that the patterns play out across a accumulation. Even though technically this is like an early weakness, we can look back on the big picture. That was one little area, but the other area that I used quite a bit, and I ended up using it almost all the time, was this one right here, was this guy. And this is the one that first brought to my mind those concepts of like, you have like a walk down here. This looks really similar, doesn't it, to what we have just experienced. You have a walk down here to a bottom. Now this actually hits a new low, again, indicating that there's weakness there. We haven't done that, but then there's like an M cross, a really straightforward M cross, and then it does that big move up. Everything that's innate in what I've talked about really started with this observation that there was a consistency here in order to bring you back to retest eventually this top. I mean, that was kind of where the wave goes. This is just a buy-in phase back up. If you want to look at it as like a bunch of weird lines, you can, but it's just an arc. It's a bigger picture arc, right? So there's a wave down and then back up and then back down, So you can do that. You can be a crazy person like me, or you can just look at it and say that's a way of buying in, and it has weaknesses in it. Every time it comes down, it basically makes a new low till here, and that's where it changes character, and you can make a buy-in. And this was earnings of 2021. It was a long time ago. But it's fascinating because if you come back and you look at these levels, and you look at, for example, we were just talking about, like, where's that middle at? Well, there's a center mark on this drawdown right here that's actually marked off on the chart during the drawdown. And that ends up being like a really important key level for distribution, right? And then so is this, but this ends up being like a midpoint. This is like our 485 level, isn't it? Things like that. And I think it's really interesting to look at where we are and say that we didn't go low here, and then we came up to like 4, right? We back tested. That did happen. We back tested finally. If we drop into a spring, it's more akin to, and this is also different because this stayed up high. But if we drop into a spring, it's actually more akin to 2020 because of the setup. And that means that all that's left is just jumping that creek, and then you're finding support and going. And that's the big melt up right there. And if you look at this and just, again, take it really simply and just do this, draw the line and say, yeah, that's what needs to happen right there. Assuming that what we are experiencing is indeed a spring, that's exactly what Wyckoff would say. So this is a phase B bottom right here. And then you get a push up, you define again that creek, and then you drop into a spring, and then the reaction takes you back out, and then you bust out and go. Where does it go to? Here. Take that same diagram, that same principle, right, and apply it to the macro where we are now. But remember that there's differences. Like the change itself is not, it's noteworthy. It should not be ignored that there is a pretty big change there, right, from one to the other. But take that same thing and look at what you're experiencing right now. And it's like, yeah. That seems about right. there's that line right there. It's the same one that cuts through this top. Where's the halfway point, you know? Like, we've already kind of addressed this, but I'm just wanting to let you know, like, it's not disconnected from the behavior of AMC as it has been. I mean, it's been pretty much like this the whole time. Look at the drawdown right here, and you can see that that's 642. The drawdown right here is 536. Like, both of those would be potential middles, and I think the 6-1 is a different one, 613. But those are all there. I mean, it's all like the same information. I wonder about 5. That one's different. That's a tiny little ledge, like 530. But that is where the gap is, isn't it? It's like right there around that area. Where was that? Let me try one more time. So that one's 6, and then this low. Yeah, the middle's like 520. It's probably right around where that gap is. So that would imply not a whole lot. It just kind of means that that's still the same or similar region. It's just another way of looking at the same information. It would be slightly different. You guys are like, well, that's not helpful. No, I mean, it's still helpful because the data that you're getting from this is it's just not insignificant. Like, it's the sum of the total, right? There's a saying of sfumato or something like that, or gestalt, I think is the right word, where it's like the sum of the parts, or the whole is greater than the sum of the parts, right? So there's this way of thinking about, that's an art term, but this way of thinking about like how the parts themselves add up to something, but the actual total of it is really more important, more significant, more impactful than just the little bits of the parts, you know, put together, a bunch of little pieces put together. So yeah, this to me, yeah, this makes sense. There should be a middle cross here on that drop down. Really, that's usually what the depression is or the low is, and then there's that wave back up. This is the move that you really want to catch. The only thing that might bother some folks about this is if it goes into a spring, it would be easy to say that this should then hit the top and then come back down on the small scale. We're not talking about on the big scale, but on the small scale. And I'm not sure about that. We have examples like this where there's clear backup, but this is also above kind of major moving averages and stuff, and it's a different time. You also have examples like what happened here. There's no backup like that to speak of. You know, the backup, there's no like second jump. Like, if you didn't see this happening that way, you could make an argument, like looking back in time, you could say, well, there should be right here then, if this is an M cross, this is a spring. Shouldn't there be like a second jump right here? Maybe that was what this was supposed to be, you know, and it went way too far. It may not have looked this violent if we didn't have the short squeeze. You know, people talk about, I was talking about earlier, like that didn't seem like it made a lot of sense to me. Like, why do we have this or that? But this ultimately makes sense. It's the right spot. So maybe originally, if this had broken out like a normal stock, maybe it would have only done a 50-50 around that and hit, you know, at most this high. I think that's reasonable. I would probably sign up with that theory and say, yeah, that seems about right. Maybe this wasn't intended to go as high as it did. And so this is a bit of a strange one. This makes more sense mathematically. So, I mean, you could look at something like that and say, well, that presents an issue because you're thinking it goes really high, but what if it doesn't do that in one move, you know? It's a good question. I don't really have the answer for. Wish I had the answer for everything, but I don't. You know, if it only goes down to like 240, let's say it goes to like 242 and it hits a spring but doesn't make a new low, great. Well, in theory, couldn't it just stop here at like $5 and then come back to 360 and then go? I guess. I mean, it seems possible. I don't know. I would look at the grand picture and just say, does that make sense? Here it makes sense because it's so far away from this trend. The way it moves is just pretty radical. I mean, it goes really far. Looking here, that doesn't, I don't know if that makes as much sense to me. Doesn't really add up quite right. I guess it could. Yeah, it was huge. That was a huge move. It was pretty unique. I'm just thinking, out loud. I mean, if you use this as a guidepost and if this was the only indication that you had, then I think, yeah, if it goes down to like 226 or $2, you have a better chance of making a pretty big move above it. If it only goes down to, I don't know, like I said, if it hits like 237 or just 230, something like that, like just below the low or between those points, it's not going that far. It may be possible that that's intentional, like they're trying to stop it from going ridiculously far at first. So that would kind of stink, wouldn't it? If the first move only went up to like 5. Not really sure what would happen. That's pretty low. It falls in line with this theory, but it doesn't fall in line with like the theory that it follows the parallels. It does not fall in line with, in my opinion, this theory, because this one is far more intense. And I don't know, you can't really reconcile the two. They don't, it's one or the other. So yeah, there's not really a comparison there, because if you use the bottom theory, which is again either from here up or whatever, you'd be looking at this guy. Like this should be where it's going. Here, which again is like $9. I find that to be a little bit more convincing to me than it just stopping short and just not going anywhere. But maybe it just has to do with the market. If we only stopped, let's say we went up to like $5 and then came back down, it'd have to be because of FOMC. Somebody mentioned that earlier. It'd have to be, right? Like it'd have to be because of rate cuts or something. Like holding out until the 16th or something like that, and then having like the rest of it. I don't know, rest of the push up to like 7, because I can't imagine like what else, like what other reason would there be to do that? I don't know. It doesn't really make sense. I'm not saying it's not possible it stops. I guess everything is possible in the market. Anything could happen, but. This goes really high too. I don't get it. I don't get why you would. Well, I guess if you use this as a guidepost, still a big move, but it's not nearly as big as you want it to be. Let me try something real quick. Now I'm curious. You find evidence something different might happen, you should probably investigate it. Yeah, this is pretty low. That was expected, wasn't it? So it's just going to be a big debate in my brain now. It was expected that it would kind of stop or it should at some level target the gap. But this is like almost too much. So now I'm not happy. Now I'm like grumpy pants. Way to go, Booksy. You worked yourself into a corner. Well, so what I'm looking at is like that 521 is super low. I'm not sure. I use the top to the bottom here. I guess it really just depends on which one you use, because the top to this bottom is definitely in the right spot, 640, which we've been saying a lot. Like that's the one we like the most. But there's another one, so that would be a bounce and a weakness. There's another one that's like way lower, and that is concerning. Only because of the short-term nature of it, not because of long-term. There's no long-term problems. There's nothing wrong with it, by the way. I'm talking like there's like a big issue or something. That's not quite what I mean. All right, I was a little off. But yeah, there's definitely a ledge there. That's at like 531. That number came up a lot. I remember 530 coming up a lot. Like 531, 532 specifically. Yeah, that's where that gap is. Right there. So there is a ledge there. All right, well. Yeah, it's just a question of strength, I guess. I mean, there's no denying that it's pretty similar in a lot of ways. I would say that I'd be careful about this because, well, this made a lower low on the second hit, but at the same time, you know, the way I'm measuring it on the other one, you could argue that that first hit was the 485 level bounce, and that's where it consolidated. The second hit was the low at 239, and then it broke out. You just can't see it here. Ran up and then chilled out between these two variables, eventually dropping off 485. And then this is the $4 bounce here. It's coming back down, but we don't have a spring here. This is kind of backwards as well. We only have an LPS, which I guess would be consistent if we don't get a spring right now. We don't get a spring right now, it'd be really consistent with this. In that way, but this is also lower, and that's a big difference. Both of these are lower, which again would indicate weakness as opposed to strength, so it should be stronger. So this does come up and have some problems pretty much at that gap zone. It would be the equivalent of our gap level right now, and then it came back to hit the creek. This might have also had a desire to come back and retest this because they didn't retest it on the way out. So there was a little wick that comes down to retest the steepest one. It wasn't checked. That would be like from the top down to 4. Why am I grumpy? I don't know. I'm grumpy because now I'm seeing like possibility that it doesn't go very far at all, which I don't like. This kind of spats in the face of everything else. Here's my thought about this kind of stuff. I I always feel like I arrive at this like too late. But then I wonder in the back of my head if the reason for that is because the operator's not sure what they want to do. We have this idea that the operation is somehow fixed in time and like it's going to happen in a certain way, like it has to happen in a certain way. But I don't think that's true. I think that operators have just as much of a question mark at times as we do. The stuff about the tariffs, the stuff about rate cuts, like all that stuff could impact maybe the timetable here. And there's these weird little unaccounted moments, like we were talking about back here. Like there's not really much to say about it except that there's this kind of a simple explanation is that they just didn't know exactly what was going to happen. So there's an allowance for like two possibilities. Whereas when it's pretty set in stone, it's usually really easy to read. I find it to be pretty straightforward. You know, when there's like an obvious, hey, this is going into a distribution, it's not that complex. It's business as usual. But then I wonder on the big scale if there are these moments where it's like, it seems like there's uncertainty. Because I bet in a previous time, if this dips to a spring, no matter what happens, it's like there's nothing in the way of this. It's all good news coming. Probably make the most sense to just go all the way up and just do it like you did before. It may not make that much sense to do that if you don't know if the rate cut's coming and that's part of what's going to run this. If you think that's necessary, which I can't say, I don't know. Is it necessary? I don't know. Maybe. It's a weird question to ask because I'm like not really sure. You know, what's necessary? I don't know. You know? So that's a tough one because I couldn't tell you. I just don't. I'm not trying to cop out here, but this is a weird question mark because now I'm wondering if this is here because of rate cuts, because this is running up into August 29th. And I'd been talking about yesterday and the day before, like the market might run into August, which is fine. What do we do if over the course of a few days, AMC is just really not moving? Maybe it doesn't matter that much because let's say, for example, that the goal is to hit that gap fill. And again, I'm like using this. I just said, let me try something. What I did is I pulled the same marker. It's no different. It represents the same value, even though this dips below it, I know. I just pulled the same marker from bottom through where that ledge is here, and it drops off. That distribution happens. And I'm looking at it like that's the top range, and then it drops down, and it forms the little next bump. And this is the top range, and then it drops down, it forms the little next bump, okay, as an iteration. And I said, well, let me do that. Yeah, this took a lot longer. It's kind of ugly looking. But regardless, you know, this does have the same drop ledge. This is the angle. I'm curious because it's pretty low. And I'm like, where is that pointing? And if you go to where that gap is, it intersects the topmost creek here, which is the peak pinnacle, in that motion right there. That's the same motion that was made back in like 2000. I wish I hadn't seen that now. I guess I can't say that. I'm glad I saw it before it happened, if it happens. That was the same angle that was used here. They had the same thing. So this pops out, and it doesn't go beyond much more than this does, but it's on top of the creek. It comes all the way back down and checks it again before it actually advances. It's just a different schematic. So it sort of misses a key jump. That's the blue one. Aha. Well, that wouldn't be good. So if that wouldn't be good for an argument that it's going to keep going. But I think AMC did that too, didn't it? Because it like gapped up in 2020. It gapped up off the bottom. What the heck does that mean? Holding the stock doesn't cause a short squeeze. It is a component of a short squeeze, but holding the stock doesn't move the price. Buying moves the price. Selling moves the price. If millions and millions of people are holding the stock, but nobody else is holding it, and they're just selling it, and mostly selling, like buying and selling, like buying 10 shares, but then for every 10 shares, 20 people are selling, or whatever. I mean, it's just outweighed. I don't really find that to be particularly confusing. Yeah, it's high now. It's changed. Well, yeah, I wonder. See, that's why I was wondering about this drop. But I wonder here. So what I was trying to do is see if where that gap fill actually is. But this closed pretty high. So this is at 530. But the gap fill, I have it here, but it's actually higher up because it closed. The candle closed much higher up. I'm on the 4-hour. The 4-hour candle closed at 520, so we're right. Well, I don't know. This isn't straight because I'm dumb. It's 520. There we go. Yeah, we're right. I think we're correct. That's 530. That's that little ledge. So it's possible. I got to make sure this one's correct, though. We're going to get a run up, but it may not be as extreme as I would have liked. I hope that there's like if it does run hard, I hope there's like a big gap up day or something where it's obviously above. Like, like the final day is like a big move up. It'll be easy if it does that, as then you won't have to guess whether it's going to stop or wait, I should say. You won't have to test your patience with it. So this intersects on a triangulation path in September. So that would be a very different markup style. Because it may not even get that high on the first run up, and it may drop back down. I know I'm saying a lot of may and may not kind of junk. But I'm thinking about how if it didn't check, for example, this is an example, okay? We don't know what's going to happen. But if it didn't check that mark, and I suppose I'm most concerned about whether it goes low enough for a spring. This is not long term, by the way. This is just short term. This is September 3rd, and that's the same as that GME earnings, I think. So I had wondered if it was going to do something like that and like starts moving in August. I've said that I thought maybe it was going to be hitting the top in August, that line. That still makes sense to me, but there is reason enough to say like it could be a number of dates here. Because it dropped from this ledge here, at 13, 1340s, around there. It dropped there on September 6th. And that's definitely a possibility as opposed to like the October 25th. Most of my stuff is dated out farther, like October plus. I'm not trying to get anything for August, September because I'm not 100% on when I'm doing options. I'm not 100% on that. I just don't know. I wish I could be like, again, really certain, but I just can't be. It's too big of a question. So the way this is set up, if we were to go, let's say we were to go just to this intersection here by the 3rd or 4th, which would be GME earnings. It's just an idea. Again, don't get too upset if it doesn't look good to you. It does make sense that the whip around could be quite steep. You could have a dump down to like $1.90 or something, and then you're in a really good place for that 50-50 that we talk about, which would constitute a decent spring. I mean, that gets you above here, and then you go. But then in that other example we looked at, it actually chopped and then came down. So it'd be like having this like big squeeze moment. Maybe like this. Something like that. It'd be this big squeeze moment. And that's a big drop. Again, I don't know if it has to do that, but that's kind of the most extreme I could find, by the way. That would be effective. And then you'd have a kind of a final push up here. But I wonder, you don't really need to go that far. If you're not going to get to the gap, it doesn't really matter where you stop. You can stop at like 475 or 461. That was the other number we kept talking about. You know, because you could stop there and then back up into rate cuts and then not go anywhere until like the 16th of September. And if rate cuts are announced, then you take off, you go up and you fill that gap. And when you do that, you're above the creek, like the topmost creek. In fact, if you do it that way, you're kind of intersecting right where you would need to be, I suppose, is a good way to look at it. It'd be a lot longer dated in terms of the move. Believe it or not, this actually is quite consistent because you have a walkout here and then it's slower. It's not as fast as maybe we were expecting it. But what's consistent about it is that this move here expands. So this little guy, which is a 1, 2, 3, 4, 5, goes into a 1, 2, 3, 4, 5 here, which is also walking up towards that angle, which is the more expected move, which is like going towards 10. But then if it doesn't quite get there, and you'll see where I'm going with this, $10 or $11 or something like that, right? It's actually exactly like the previous because this is the next orange creek as well, which is right here. Excuse me, right here as well, which I don't have it orange on the chart, but I should make it all the same color. This guy. So it'd be consistent with a move up that's similar here, but happening on a bigger scale. And then just like this backs up and then runs again later, this backs up and runs again in January. It's actually, yeah, I mean, it keeps saying actually, but it really is actually quite consistent with what's currently on the chart as a possibility. I don't find that to be incredibly inconsistent. That would make sense. And then you'd have a January squeeze. So you're still getting to like the end goal, but you're taking like a different route to get there. It's not the one I would want if I had to pick one. I mean, it's kind of slower, but not exactly wrong. I mean, to me, it looks quite nice. Yeah, and then you're probably in going into April, just going sideways here. You'd have something like this, just like we did in 2000 and yeah, something like that going into April. Basically redefining the top around like 15. And this would be like your last line of defense. So there'd be some kind of weakness here, and then it would drop in like May, April, May. And then go into the cycle all over again. And this is choppy. This wouldn't look like this. It'd be a lot more sideways and stuff. Probably better to do it like this than the way I did it. Strangely, that to me looks pretty accurate. I know I'm like speaking the same thing over and over, but then it's just a micro iteration of the bigger picture, which we're already expecting. Here's another reason why I think this might be necessary. Because in the first setup, I said something, I don't know if you guys remember, there's this weird little idea that this particular top should have led to the backup point. But it's really difficult for me because I see that and I'm like, well, the backup point needs to make sense. You could do like you could do a 618 retracement from like 1246 to hit that if you hit a low, but there's no reasonable backup point. It's either that or 50-50. The 50-50 was the only other one that makes sense. That's 870 right here. So it's like if it goes up and it backs all the way up to this top. That should have correlated to a backup to the creek, but there's no way to back up to the creek and only hit 407. It's not possible. So what I mean is that like go back and look at 2020. This is a very like specific triangulation. Now I know it doesn't come all the way down, so that could also negate my argument a little bit, but it's pretty darn close, right? Pretty darn close. And it does back up nearly all the way to where that creek is right here. Again, doesn't come all the way down. I acknowledge that, but it's really close. So not only is this like a really simple triangulation, it's a 618 retrace, blah, 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 but when it does back up just to retest the top here, it does so and also checking the creek essentially at the same time, like where that elevation is. I can't really see that right now because we're losing ground. We're kind of at this really steep creek here, and if we drop far and then race all the way up, let's say you went up to like $10, you could pull all the way back, but you can't possibly it's taking too long, I guess is what I'm trying to say, like relative to itself. Let's say, for example, this went sideways and took, I don't know, let's say it took till October for whatever reason. Like it doesn't ever run and it runs in October and you run up. Okay, great. You pump up really far. Awesome. Well, where is it going to come down to? Well, if it comes down to 4, it's definitely not checking the creek, which is currently like a 265, right? It almost needs to make a full throwback just to get back down to the creek. That's really different than like a 50% to 60% retrace. Really different. So there's a sense in which time is against us right now in that regard, because this makes a stronger case for like a healthier move because it's actually backing up before it advances too far. It just makes one advancement at a time and backs up each time to the creeks. If it makes one gigantic advancement, yeah, you're going to make bank on it. Don't get me wrong. But like, it's going to be, in some ways it's going to be worse because if it goes too far too fast, that retracement would have to be really, really deep. We don't usually see that in bull setups for AMC, like really bullish setups. It's usually during bearish trends that we're getting like 854 retracements, bearish setups, I should say, when it's distributive. It's like as low as it could go. Now, I'm not talking about this guy. This is different. But I'm talking about like after you start running. I'm not saying it doesn't ever happen where there's a bull trend and we get like a 786 or an 854. But the better one is the golden pocket up to 5. So I'm not really sure why you'd want to see that go to like $8 and then come all the way back down to 340. And it can't possibly come to like 429 and be anywhere near it. That's a huge space right here. So it can't like hover right above like the previous one did. It just doesn't make sense. So it's almost like you need that right there, and I'm like staring at it with my eyeballs right now. I'm getting kind of tired, but I'd take a break. But I'm like looking at this like, yeah, in a lot of ways, this is probably a better setup for us. Even though it's slower and it's not going to be wouldn't be as volatile. It's probably a better setup. It's still a huge move. Don't get me wrong. It's a big move. If we went from like $2 up to the top, it's still like 370% or something ridiculous. But my big thing about that is that that setup doesn't really include that backup. The first setup doesn't really include that backup, and it's not very healthy if it does that. So all right, hang on just a minute. All right. Okay, I'm back. Yeah, I don't know. I guess at some point this just turns into a bit more like speculation than anything else. Because we don't know what we don't know. Like if this moves fast enough, who knows? I feel like at that point it's kind of it's really just more a question of speed. I mean, we could probably make the same argument here, and I could just compress it all. And I could suggest to you that, yeah, all this stuff is going to happen, but this is going to be August 22nd, and then it's going to go up, into September 3rd. And that it's almost like it doesn't matter because then it's like, well, then the rate cut decision is really just confirmation of, yeah, it's bullish, and then it goes sideways again. I can't, outside of just these trajectories here, I can't really speculate very well aside from what we've already done on that timing. I mean, and what we see is that August 22nd seems like the right date for this to break 340. So what we do know is that what seems most likely, at least to me, I would say August 22nd through September 6th, because those are the 2 dates I get the most. We'll just say 350 because it's going to be a bit odd to describe, but that's actually where it is. And it's technically it's at like 316, but I don't want to go into any more detail about that. Like when this backs up to the creek, it's going to be very similar to the way this thing did. It should be the same level. It has to do with the consolidation level, and it's the same. Like they picked the same marker, and it's this 3.16 marker here. So it should back up and hit that no matter what. That's the level I think that we're talking about, but I'm gonna say 350 because it's really like up here, I guess, is where you're thinking about the creek break. So I'm gonna say like it's really August. Sorry, I said August 22nd. It's August 25th. My apologies. August 25th to September 6th is the most likely time period. I can't do any better than that. It's beyond me to do better than that. I'm sorry. The the setup for a long time has looked like early to mid August. Because of the way the AMC set up with its earnings, it is early to mid August, but I think that when I started looking at that cycle, I was like, it really takes longer than that. So this could be, if you're looking at this, let's say you pretend like you're looking at this in reverse. You see this like motion right here? You guys are like, I can't see jack diddly squat on your charts, Booksy. You just made another chart that's just as messy as the first. You said you weren't going to do that. I know, but there is a bit of a symmetry going right now. So let me show you. Another one? How many times are you going to chart the same thing? Yeah, but this is just purely for one thing. Promise. Proceeds to scribble all over his chart for another hour. Okay. Yeah, I think that's the one. Is that too steep? I don't really know why I did what I did there with that value, but I'll try it. I'll try it out. I think I was using these 2 points and just kind of ignoring the top. And there is a gap right there. Right now, there's a little bit of a symmetry going on in the way it's presenting this information. So let's say, for example, that we believe in the symmetry here to some degree. this motion would be probably the best representation invertly of a spring if you were going to pick one. So you would look at this and you'd say, let's just invert this idea and go backwards. You would be thinking that this goes down and then goes into like a spring motion and then back out again. I guess it's possible it's doing that. Like it really is inverted. That would be interesting. I wonder if I change that angle a little bit, if it does much to the bottom. Probably not. I mean, that's a nice value, though. It implies it hits 226 and then chops sideways. And you would take a look at that, and then you would say, well, it comes back out and it needs to be out of there by... Come on, Booksy, do the math. See, it's backwards, so if it's going to be out of there by the 25th, then it has to be moving before then. It's really fast. Then again, this is like straight up, so I guess in theory, like, it's not impossible. But this is like straight up. Like, there's very little in the way of movement. So the time it takes is extremely fast, and I already think that this has gone on too long. This has definitely gone on too long. Ugh. So that's not gonna work. What about the middle? Where's the middle, Booksy? Use your brain. Come on, kid. Man, I don't know. Maybe that's the middle. It's not going to be any different. I mean, it looks right. There's a distribution right there. That is where that weird wiggle was. You'll be fine. If you bought in at 5, you're going to be in great shape. You're going to make good money in the end. That's my opinion, but I don't think there's anything to worry about. If you bought in at 5, you're doing pretty well compared to some. Okay, well, I mean, that's pretty close, but it's not quite right. Let's try September. Let's try September 6th or something like that instead. Let me see if that's any better. It had to be the 8th. I guess it could be the 27th, because that's a Monday instead of the 25th. Wait, what? Did I just say it was a Monday? Why did I say that? It's a Wednesday. So, alright. I guess it just depends on your point of view. I don't know. That to me looks right, but I guess it could be a little farther. This looks pretty good. I think we're correct. Why did I do that? Because that should give us a sense of middle. And then That does mean that we're right about the 350 thing. 350 is right here. That's where it is. So it should be breaking out. It's still too fast. This stinks. It just seems like there's no way. There's no way you're going to get down there. I hate to say it, but it's kind of gotta be earnings. Like there's gotta be something that really drops it. Because in reverse, this makes sense except for the fact that there's no way. This makes sense except that it's impossible. You can't do it that's such a fast move.
It's time for your afternoon stretch break.
I would be okay with this. I don't think I would care that much if this is the one that's hit instead. Might be a bit of a rotation we could do on this too, because this has a wave, an inverted wave here, like this guy, and then it's going sideways again. So this might be one of those situations where there's not like a really strong. Oh, that actually works pretty well. Oh, that might be it. I don't use rotation as much as I used to because it's kind of like meh. Reliability is low. But I'm not going to lie, that looks pretty darn good. That changes things. Because then if you're not going that low, who cares, you know? And then the rest of this is like inverted too. So then you use like the middle pivot instead from here to there. So how far does it go, Booksy? Do it. It looks clean. I'm going to consider it. That could be the spring. Timing here is tough because... Yeah, this totally works though, doesn't it? It looks just like that 2020 build out. Like just like it. I'm not sure if the equivalency should be drawn, but you take this top to this bottom and then this top to this bottom. And there it is. So the rotation goes to 243. Dang, we're good, man. You know how good that is? That's like perfect. That's exactly what you want. Because you want to dip right beneath that bottom and then be done. So I don't know if that's 100% correct, but it's really close. It's like 99%. I'm eyeballing it, but I'm like definitely only a penny or so off. That's perfect. That's a perfect rotation. This is good news. Let's really do it perfect then. I'm going to make sure it's right. $359, $359. It goes to two. Actually, it goes to 246. It's a double bottom. Jeez. All right, that's kind of a bummer. I thought it was going to be. I don't really want a double bottom. You guys like, why not? I just don't. I guess if it's a double bottom with a divergence, it doesn't really matter, but I kind of wanted that spring. Maybe it'll get like a penny or two below it. But that's kind of a stinker. All right, well, it's a perfect. I'm probably not gonna do much else. God, I'm like dying today. It's been a long day. I've been on here since like 9. Sorry. I am. I'm gonna make a guess that it's Monday. I don't know exactly how it's gonna work, but like Tuesday should be a drop, and then you would hit the bottom, which is actually fine because that's the 19th. I know we already charted things. I'm not talking about charting new things, but if we already charted it, then just go with your instincts on it, you know? And then this actually reverses the other way here. Yeah, I'm sure I did. All right. Well, if it goes even a penny below, then it should get to 376. So the reversal here is like this. If it gets at least a penny below, that's a spring, I think. You're going to get a reversal. Should wrap around here. That works really well. Actually, the first move would be above that 50%, which is actually perfect because it's above the that rising trend here. That's just a retest on the rising trend, and then it breaks up. I don't know what happens after that, but in terms of like rotation, I would probably just leave it at that. That's the first rotation. I'm a pretty risky person. I like to play that because if I know that the setup's ready for it, but I would wait until it happens and make sure that the indicators were there. I wouldn't wait, but I think if you're not wanting risk, then you should probably just wait. Once it jumps over here, this is the 4-hour moving average. It should just hit it and go. And then this adds back to itself. This is exactly where it should be because it's going to come right above this top. The only thing I'm concerned about, and I'm going to say this again and again and again, I can't stress this enough. It is a huge concern of mine. Is that if it doesn't go low first here, if it doesn't hit a low, I'm very concerned about this push up. Like if it's an after earnings push up and it doesn't do what you need it to do. But it does add up pretty nicely to being about August 27th. So in theory, you could have a backup right there until GME earnings, you know, on the 3rd, and then go again, you know, and continue the path forward. So what I was trying to do, I wasn't trying to do a full rotation, but it turns out this is actually a really clean full rotation, which is nice. If it does it, it's great. I'm a little nervous about that bottom still. But that adds up quite nicely to a reversal of this. The only thing about that doesn't make sense, obviously looking at it and just staring at it, you can tell, is that this only seems to reverse to there. It doesn't go below that mark. So if we were thinking in terms of like, hey, it should have a big dump, then in theory it would be sort of make more sense to hit 190 like way down here. You know what though? This is where I guess I always kind of think about AMC as like it already hit that here and it pushed away from it. So it did already check that number. I don't think it needs to check it again. I think it needs to do what's best for itself in the range. I've said this before, but this is a lot like what happened in this time frame. There's no grand return back to some like super low number. The variables are very similar, but it never goes back that far. It has a propensity to do it, but it doesn't do it. I guess I can't really find. I don't know. I'd probably waste my time trying to just find that example again. But yeah, I mean, there's no. It's like that, I think. Well, I guess this does come back and check those levels, doesn't it? Well, there you go. The way I did it before, I remember seeing that it just didn't come back down. Like locally, it just made the spring and then left. And it could have come much lower. But now I'm like staring at it thinking that, I mean, in all truth, it kind of did. If we use this as the hit instead of the other, then which is kind of similar because we're using this bottom right here. Then it doesn't technically get down there, but it does get pretty close, doesn't it? It also sold off like halfway. So, and that halfway point was pretty clearly marked off. Right there. Yeah. It's right there. It's weird because it doesn't actually go all the way up over here. This is like what defines it is that top, nothing else. Hmm. And this goes over top that, which does not do here. Hmm. Well, I guess this has a pretty clearly defined middle already. So that would make sense as a middle hit. It doesn't make sense as a bottom hit. But one more thing. I'm saying but a lot, but like this is a this actually makes a lot of sense as to why it drops too, in part here and not right now. If it chops through here, it won't drop until it hits that 270 area, 274 area. That's the way it seems to me because it looks like it would be off that support and it would kind of bounce here. So that we might be sitting right there at earnings instead of making any more upside. I thought it was going to come back up and retest this. I didn't see why not. I was like, well, they didn't check it here. But now I kind of get the feeling that that might be part of the plan because if you don't test it here, then they've missed it. Like they missed that back test. They didn't check the EMA either. So they're doing I think this is partially a slingshot, like where you're pushing away without going back up. It would have been a lot more controlled if they had popped into earnings, because then they've already done that test. There's no reason to come back. I mean, you could say there is, but we'd look at the next ledge, like this one, 279 or something. We wouldn't look at 309 or 310. It's that 336 ledge that's going to come back to. It's really tiny, but it's right there. It was never tested. That's the one that I think we'll see on a rebound if this continues to chop. I don't think I would prefer this. I think I would prefer it drop earlier. I've said this before, but it would be better to go ahead and get down here at earnings and just kind of like come up above, or make the dip and then come up above. I guess we'll find out. This is just another alternative. It's the same garbage, different path. Yeah, and then we're going to deal with more potential overhead. But I was really trying to do this to see if the timing itself made any sense. And it does. It does make sense. The timing itself is pretty solid. If you get a little dip here below, I think it's a good timing. And then all you have to do is jump the creek. Once you do that, you're off to the races. The only thing that's going to stop you, and this is where I'm most curious today, now that I've got my grumpiness, is right here. I think this is the most challenging, because this is going to be a gap fill at 520. I don't know. I don't think it's going to get us above that mark by much if it gets there. And that's a bit of a problem, you know. You could run into some headwind right there and have some serious issues. If you were to get above that value, that's a different story, but I'm wondering if we're going to do it like an iteration and then back up into September and then just kind of go again. Like step out instead of just run straight out. On the bigger picture, if you look at this same motion, it's really far. This is why this matters, because if this backs up here, then on the bigger picture it backs up again as well relative to itself. So I don't know. Should come all the way above that, which is like 12. So which is it? Is it 12? Is it 6? These are pretty wildly different numbers, Booksy. I don't know. Where's the daily moving average now? It's way low. It's gonna be up here. It's got to be up here. But it's not likely gonna hold that this time. So I mean, that's why I'm a little stuck. I think it doesn't need to go that high. It's like 1070 or something. It'd be fine. But it does seem very possible that we may get a backup before then, around the 16th, which tells me that rate cuts could drag this run out farther than I expected. There's always a number of ways it could go, but so the first move goes here. The second move Goes here. What is this ledge even about? Yeah, we'll look at it probably tomorrow. I'm sorry. Just trying to finish up. Check it out, guys. I wonder if it's about this. Look at that. Wow. I mean, this works. And then you have like a slumpy October into November. And you leave around January. This is a really long time. It's a long time. That puts you in the right spot. That's pretty different than the other one I just did because it's a lot higher up. But at least like it's further over. It's not significantly different, but it's further over. And then it doesn't leave until like December or January, and it leaves off of should be 640. Still got this too high. I don't have any other way to qualify that because it should be right here, which makes sense. And I feel like that's where it needs to be, and it makes the most sense. But it does mean that this is slower. I did it proportionally, and I thought that it was going to be faster. Or I thought it was going to be slower than the first move, but I thought it'd only be like 12 4-hour sessions, which would be like 6 days. But 6 days may be too slow for this move. I don't know. 6 days from the bottom is very, 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 very fast. And that would be from like the 20th to the 26th, which would be like straight up. Some of you guys, and I'm with you on this. You probably don't care that much because you're not trying to catch the move, and I respect that. I'm not trying to catch it in so much as I am just trying to make sure I'm doing this right. So I understand like there's a really doesn't make a huge difference down here as long as you're getting something that's not going to screw you over, right? You're not going too short. You should be fine. Anything in October or beyond, and I think all mine are December calls. I think you're in good shape. And then I don't believe that it's unreasonable, but I think you should definitely consider that there's a strong possibility that this move doesn't actually go up again until later. I guess the bigger question is, could it be lower? I didn't really answer that question. I guess I have to say, like right now, the answer is yeah. But it has. If I had to answer it, if you said, "Hey, man, could that just stay like down low for whatever reason and stay sideways here?" Is that possible? And just not get above 530 or something or 550? Well, yeah. I mean, the way in which it's set up, I don't know why it would do that because it's been sitting here for a long time. But I think you could make the argument, I guess. It's a low liquid zone right here. The thing is like most ranges don't actually trade. They trade out of the middle a lot of times, but like they don't typically do like a full holistic trading. You see like one of two things. If you look at the VRVP in a range, you either see it look like this, which is like a big cone, you know, or a triangle, or you see those two wings, like tops and bottoms. Yeah, I think the one in 2020 was like the wings. I think there wasn't really much in the middle traded. It's really hard to see it now. It's hard because this buy-in at the bottom is so huge right here. Actually, this is a little more like a cone. So they did come back. They traded through the middle here a bit and here a bit. And that's it. That's like the only time they're in there. This arguably, I guess, was the middle as well here. But you never sort of see them go sideways except for right there, like in dead center. It's kind of fascinating to see how many shares are traded hands in the non-sideways period. I remember it being different. I thought it was like heavy top, heavy bottom. Well, it's heavy bottom if you include the buy-ins later. That's pretty even. I'm all good. Thanks for saying that, but I mentioned it yesterday, but I'm probably going to change gears by next January. I'm probably not going to be doing the streaming like I am now. I'm looking at other options and things I might want to do, so just FYI. Yeah. You know, operators are fairly diabolical. They really are. And they do like to kind of run from more of a middle position or like suddenly, and that's kind of where we've been is like sort of sitting around the middle up here. Just suddenly run from a middle position because it's hard to know which way it goes. So a lot of the cat ears will usually end in the center of the range. And then it just picks a direction. And I like that it's dropping right now. More like a spring. I'm playing with this idea in my head that I don't like. Let's say, for example, it does dip here, but it doesn't make a new low. I think it's a real possibility that this could actually go into a pop into September, but then just not go far. It doesn't add up when you think of the big picture because you're like, well, it didn't go right. Like it missed the move. What about all this sideways nonsense? Well, that's true. It missed the move. But if it dips, because it's dipped below this value right now, if it just goes, I'm concerned what if it hits this value and just drops through? You know, like, and I'm not talking about like a full-on horrible drop. I'm just saying, if what if the news is not expected to be very good, right? And you get to September and there's no rate cut, and it's bad, and I don't know, something else happens and the market's going crazy. This new range that's built out, I hate to say that it definitely represents like the top, but there's not really any rules that say it couldn't be the case. This is going to tick some people off. After all that, I do this every time, man. Every time. But it does make me wonder, you know, if you get like a. That's a good idea. You should probably make it like a 30 trade challenge, but that way every trade has an equal part. Hey, it didn't work out kind of thing. For every trade, you get one mulligan. That would probably be fair. This makes more sense as an inverted head and shoulder, doesn't it? Yeah, it does. Like this being a shoulder, and then a neck, and then a shoulder, and then back up. This is a way I could see it going into January as well. If it, for whatever reason, we don't get above here, it would seem to us to be very bad at first. But I have to be honest, because this setup, the way it's building out, has a lot of possibilities. So we have to just kind of say, yeah, there's more than one outcome possible. Weirdly, this would be very backwards, and it wouldn't be at all similar in some ways to what happened in 2020, but it'd be more similar to that earlier example we looked at in other ways, which I find to be kind of interesting. Just a different setup. Because this would stay below that 520 and then come back up again later and break it in January, you know, for like a big move in the end of the year. Kind of a big reset move. It's still the same target because weirdly because this is still where you'd expect it to be based on the other analysis. So it's like what happens in the middle is just really different. I'm wondering if it's just a question of like where do you want to trade, you know? I don't really think there's a good answer for it, but sorry. I really do my best. I always try to do my best. And I don't want to throw anyone for a loop. But this is a reality that we need to be prepared for, you know? Our potential reality that we need to be prepared for. This is kind of maximum low. It's really like parallel, basically. Well, I haven't broken up with you guys yet, but I'm just telling you that the I said it yesterday, and I don't want to go through it all again, but we're not there yet. We'll get there when we get there. But the stream is just not. It's not long term sustainable. Like, it's not my my goal to be a streamer forever and ever and ever, and I don't really think that it's bad for me or anything. I just don't really want to do it forever. So, and I was thinking about, like, if I did do it, it'd have to be because I have extra time to do it. But I'm not really making enough money, so I've been thinking about trading full time, but that's not what I've been doing. I've been streaming a lot more than trading. I try to trade when I'm not streaming, but you really got to focus. You got to be able to focus on your trades, and you spend a lot more time building stuff out when you're focused. So, and getting those hits that you need. I'd say this flows pretty well either way. So, I don't know. If 246 or 245 ends up being low versus something lower, maybe it changes this a little bit. But like I said, if you go to like 1961, why is that 1930? It should be like 1961. If you go like 1961 and you think that, and I think I'm right about it. I mean, you can say whatever you want to say. I think 1961, 226 is kind of the range that we're talking about in large part here. But I would say that this is very likely the case that we're going to get close to that, and we've already gone through that several times today. There's really only two paths to get there, and a lot of it will be determined, I think, based on where you think the middle level is. And one of these is just a massive melt up, and the other is just like but it's only in January. Like there's just a quick build out and then a massive melt up. And then the other is more like the two-step process that we're used to. And neither is bad, they're just different. So, yeah, I mean, they're just different. I think either one is probably fine. I don't like this one, but that doesn't mean it couldn't happen. So, my personal opinions should not impact the nature of the reality of it. It's like that could totally be the case. There's this late run. Um, I suppose it could be down lower into January, but I don't know. I'm inclined to think this needs to happen. We need to see that M cross right here. So I don't know why you'd wait till January to do that. It's all about liquidity. Where do you want to trade? Do you want to trade the middle? Do you want to trade above here before you leave? Want to trade at the sixes? They kind of just pass through them. We really haven't traded them in a long time. So, I mean, if they did this move, I don't think they'd have any problem trading the 5 to 7 range. If they did this huge move, people would be all about it. So I know they would get enough liquid to trade it. If they did this, I just think it'd be super boring, but I guess you could keep it down low. Just do another iteration here. It'd be just, I can't even imagine what this would look like. It's so bad. I don't even know. That doesn't make any sense, but something like that. That'd be super low down here. This one I could see, it's the middle that hasn't been traded, so I think it's a possibility at the very least. And that looks more like the M shape I'm used to, if that's a spring. I'd be okay with that one. Yeah. Apple just took off today. What is going on with Apple? Way up there. Google just sitting around doing nothing. I don't remember when we charted it. I'll check, see if I've got it. So I probably don't have it on my chart because I don't know where it is. I have 2 minutes. I don't know. We only have an hour left in the day, but I'm not gonna. I don't think I can stream from like 9:30 to 3 or whatever my time. It's a killer on my voice and stuff. I gotta get some other stuff done. Okay. Right. I don't remember this very well. This is June, so maybe it was after June. If this is an auto reaction and a phase B top, it should be doing a strength test. But that's a big if. I think it came too high in July. I think this is too far. I think that's not a good thing. There's still a play here, but it's probably not long-term bullish just based on this. I can't be certain, but this is not one of those certainties, but there is a common pattern. It's a more likely pattern. The reason I can't be certain is because this doesn't look like a floor to me, but it is because there's a huge amount of volume right here off this bottom. So it's a really bizarre looking floor. Like that 169 doesn't look like a floor. It looks like a weird spot. It doesn't make any sense. But it came up above there. Now that pushing resistance isn't bad, but you can't go back into a previous range. So the next test, the litmus test on here, if you will, is whether it doesn't go down lower. So if it makes a higher high and it doesn't come back below the creek here, I think it's okay, at least for now. This area. And then we were talking about how, like, if this comes up above, probably we're looking at this guy. If it comes up above there, it could be bullish, but it just went too far. It didn't need to go that high. It could have come up to like 130 and just stopped. It went all the way to the top. Like, people wanted to sell. That's what I'm trying to say. If this had only come back above this, I think I would have been a lot less worried. So, yeah. People wanted to sell it. I think this is probably a great short-term play if you just want to trade the downward breakout channel here. It looks like it could be about to go. It's on earnings, so we'll see. Or around earnings, so we'll see. I don't see why this would be super dangerous short-term. Longer term, it may be a bit of a problem. I don't know if this is a great long-term trade. This is the ledge right here. If I'm looking at RSI, I'm looking at this the formation. It's kind of going into that pattern of shrinking. As it goes down, should be right there. It's probably about halfway down the move here. It's good. So this was the last time it reacted. I said this could come back up to $1. That look 97-cent area where it dumped off, but I think that the 81-cent mark probably a little bit safer. Even though there's like a steeper creek here, there is, and it didn't check it. So, barring like that full rotation, which could go up to like $1.45, I think. This could go down pretty low. Think about what you're thinking about. Yeah, I think 80 cents, 82 cents. There's always a possibility this rises pretty far here, goes up to like dollar something, but I don't know, say a feeling, but I'm just looking at this like objectively. I think that it's even possible this goes down lower. There's a lot of times these turn around a particular kind of a setup, like they've loaded up a particular number of shares, and that translates to like a dip that goes to the appropriate level. So it would not surprise me if this came down and hit like 40 cent down here and then popped all the way up to like $1.10 or something. But if it has a short-term burst, I'm thinking like 80 cents. And maybe that's it. If it's a little bit longer term and it builds out some, like it drops again and comes down, which would mean it's oversold probably. Who knows? I don't know how that happens. Maybe it's on earnings. Maybe earnings is tomorrow. It's just randomly dropped. It's pretty bad EPS. Yeah, I'm just trying to be simple with it, so I can't do a really long analysis. Yeah. I would say it could even go lower, but I think what I'm really looking at is something like this. So this is a zigzag. This motion here. Yeah, 82 cents would be super short term if it does it. So the reason why this makes sense to me is because if it's distributive, which it might be because this came really high, then it would probably have like another distribution before it tries to drop the bottom. It could avoid going low early. And I don't know. I mean, I don't know what I don't know. There's things that could happen. And even in that, if you were bullish, you would say that this creates a support, some strength test, and then it could still have a spring. It could still come back down. But I'm thinking that like, so even if you were bullish, you would say that like that could come back. But I'm thinking this middle is probably going to be used again in a similar fashion. So that works if you use the initial run up as just kind of a leg up, and then both of these are the same. 1 and 2 are the same. So you can clearly like get that off the bottom here. I feel like they could pretty easily make that move, you know. And if it goes sooner, maybe it goes all the way up to $1.35, right? But 80 cents is really that middle ground level. So I'm thinking that might be the case, that would be a smarter play. And then the rest of this, more than likely, it just kind of dumps and slumps. I wouldn't say it's going to be the same exact move, but that's a little silly. But it'd probably look kind of similar to this first one. I don't know why you would just go from here. You need to have some kind of a drop. Again, either way. So if it goes as low as 40 cents, then I'm going to say it only gets to like $1. If it goes from here, I'm going to say that it either stops at 83 cents or it goes all the way to 135. Those are pretty different numbers, but you'd have to just kind of watch it because it'd be easy enough to just hook here and drop. And it's possible they're not really interested, like the market, meaning like the buyers and sellers just don't really ever get there. There is a target there, but I just don't. That's a very steep target. So it is what it is. I know it may not be the best, but hopefully that helps. It's a decent trade. You know, and we were talking about these 100% moves. I mean, even a hook here to $1 is near 100%. But it's probably, at least for now, I would say you're really trading on a weakness because it's already in like a trend. You're looking for that trend reversal. So you're kind of doing that contrarian trade. And yeah. Yeah, I just don't see why you'd expect it to go just yet. I think that's a possibility. It's a possibility. I just came too far. I just didn't need to go that far. It would have been way easier if it had not gone that far up, but I went too far. It's a possibility it hits $1.35. It's also a possibility it just craps out at 90 cents. Because I think both of those are legit. Very like they're so different, but they really are both reasonable. So the safer bet is 90 cents for sure. I don't know, maybe. It just went too far above this top. Really, it would have been better if it stayed beneath 140, which was this dip right here. And maybe even this, like in this ledge. That would have been stronger. Which is probably why it's had such a big drawdown. I mean, the push beneath or into the previous range is not typically a great sign if the setup doesn't. Because that's typically a sign that someone wants to take it up there and get rid of shares that they got earlier, that kind of thing. As opposed to just buying and accumulating, which is like, hey, we're going to keep it kind of steady and low. They're taking up too high. It's because they're trying to sell it. Yeah. 1, 2. I mean, it does to me look like it's about to have a big drop, though. I mean, I'm just saying. When I flip it upside down, like a big run back. This is a 1-2, so it broke out. Checked here. It just looks like it's gonna come back. That's why I'm not sure about that 80 cent versus way low. It could be both, you know. It might hit 80 cent and then try again, and if it fails, then it goes back the other way. I mean, we just don't know. It's too much guessing. But I think if you're just trying to trade for a quick profit, this is probably fine. It looks like a good trade. Yeah, it could be both. Because, I mean, you could hit 80 cent, come back down, and then do a quick pop after that. I'm saying 80, but, you know, you'd be smart to be out at like 78 or something. So. Historically, this hasn't done very well without crossing up, so you're probably better off waiting for this EMA on the 4 hour to cross up and over. That's where it's gotten the bigger moves. So if you see something like this, and then it backs up, you're probably in good shape if this crosses over. I'm gonna make an alert at like 6.2. That's also where this took off, this gap. So it's a bit of a ledge there. It's like 60 cents. Might keep an eye on it if it pops above that. I can see the levels pretty easily because they established consolidation here, and this is where the drop was. I also looked at the RSI. I looked at this walk down. So it dropped here. Notice it creates like 3 little ledges, and then it starts getting like really nitty gritty down bottom. Not always iteration, but it's a good sign that there might be something like that going on if it looks like it's going pretty far. This one really caught my eye because it's at that consolidation level. So aside from like the uptrend that was lost, there's also like a gap here. So there's a value that just kind of gets lost. So this is what I call like a ledge. And then this is a hook right here as well. So there's a lot of little like ledges on the way down and gaps. Those are just things just to note. But this is probably the more important one to me. And you can see that makes sense if you look back, because then you just back test it and you say, well, does that make sense? Yeah, this is where it's consolidating. Notice when it came down that this is where it hits the support, and then it does all this M stuff right here, crosses, and then this is where it rejects. That's the M. So I think we're correct. That's why I'm saying like 80 cents to me is not a guarantee. Because like that you go beyond it, because if it did pop, it's a likely place you're going to come back to. It's done it once, twice, multiple times, you know. But it's also like a final nail in the coffin potentially. I mean, if you look at this as a head and shoulder, it could be it, you know. This could be going to nothing afterwards, because if that's a neckline from here to here, I was looking at that 50%. It's like really far. I don't think you could use this one. But still, like if that came down below the floor again, you'd be talking about dropping all the way back down to like the bottom, you know? Depends on when it gets there, but you could be going all the way back down to here pretty fast. So you just got to be careful. They don't make it easy. Nobody does. But the nature of it is, which would make sense, because I guess this is like a 50-50 down here. So that's a dangerous situation. But then the other thing I was looking at was the shake around, which is really just a wave pattern, which is like it pushed away from this, it broke down. A lot of times it'll come back to it. in a similar motion. So if this finds a bottom, it's often the same or similar, maybe not exactly the same, to that distance. So what I was looking at was what makes the most sense is like to do an inverted triangulation where you're looking at what are the more likely places it goes to. And we were saying like, well, maybe here, right? That's one, and that's pretty low. That's down at 35 cents. That's really low. And then there's this one, right? So that's what I was saying. Like, you could have a situation where it's both. Like, it hits 80 cents, comes down. Maybe it doesn't. Maybe it doesn't go as low as expected. It does seem to break kind of a neckline, but it doesn't work out, and it comes back up. And all kinds of stuff could happen, right? You have to begin with the end in mind in that case, and all of those are very different, but they all depend on what happens here and here. So there's two major spots. So you look for breakouts and continuation here, and you look at breakouts and continuation here. Those are the two pivots that seem most likely. Only because right now it's trying. If it wasn't trying, I probably wouldn't worry about it too much. But it is trying to get above. The other thing you can do is with a head and shoulder is just look at timing. Timing is usually fairly similar. So if you look at the ups and downs, it's already running pretty long. So it might be better is to use this length and just give us like a rough middle from line to line. When did it hit this mark? When did it come back to it? And that gives us a sense of maybe about how long that is. So it looks like it would be done by the 13th. That seems a bit much. We don't even have like a second peak yet or another peak. So I'm saying head and shoulder, but I'm really just talking about a reaction here. So yeah, you can do that and then use the middle. See if that works. There, yeah, and there it is. It's like that's where it should be breaking out, but it's not going. My guess is this is one of those guys that has an announced earnings and then it didn't actually happen, so it's been like pushed back every day. It probably was timed out correctly at one point. Now it's just that's why it's piddling here, not moving. Penny stocks be like that sometimes. And it could be tomorrow, you know. Just dump it on the market. Looks like it's trying. Good. I want Wolf to come down. It's a big mover, right? So it's one of those ones that should have pretty big swings. We want it to come down. You want it to come back to here. If we can get it back to 118. And I know it seems worse, but it might be even better to get it down to 72 cents. But especially if it gets back to 118, I think it's a buy zone. We want that backup. All right, guys, I'm done. I gotta be. No, I was talking about Wolf. This I don't know yet. I think if it breaks above 60 cents, it should just glide pretty far, at least up to about 79. It's not a bad trade if you can do it. I got to go. I hope you guys have a great day. I will catch you tomorrow. Happy marriage day, Nicholas. He's probably already at his wedding. But maybe he'll catch it later.